have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is Bloomberg Surveillance. Tom and Francine from London and New York. That is the Prime Minister of the UK, Boris Johnson, addressing Parliament as members of Parliament have been recalled and are set to vote momentarily to approve these new lockdowns. Again, the Commons has been recalled for a vote on these new lockdown laws amid record hospitalization figures and record COVID infection rates. Tom, I was listening online, actually, to what Boris Johnson was saying, and he really started by saying there's a fundamental difference between this lockdown and the previous one, because there is, he said, now a mechanism for getting out of it, which is a vaccination program. Again, a number of MPs there attending, I think a number of other ones online, set to vote on what the Prime Minister announced 2 days ago.
It is an historic moment. We see this in the United Kingdom with this just horrific news flow in the pandemic. And here in America, as you well know, there is a Georgia election, but the historic moment of Washington. We are thrilled to bring you John Lieber with Ian Bremmer's Eurasia Group, Managing Director in Yes United States, in all of the top risks of 2021. But in this movable feast, we note that John Lieber provided public service serving Mitch McConnell of Kentucky a number of years ago. John Lieber, this is an historic morning. The Reverend of Martin Luther King's Church has been elected, it appears, to the United States Senate in Georgia. Your Mitch McConnell attended that speech in 1963. He was a civil rights activist in his youth, working with John Sherman Cooper, among others. How does Mitch McConnell respond to what is presumed by many a Democratic Senate and a new purple America?
You know, I think for McConnell, he's got to adjust life in the minority. I mean, assuming the results that we saw last night hold, you're going to go back to the minority where he was during the Obama administration. And he's got a president in Joe Biden who he's got a good working relationship with, who wants to get things done, but a really divided conference. And so I think it's, you know, one of the big priorities for leaders right now is keeping their members together on various votes. And that means there's just not a lot of room for compromise. So while, you know, obviously it's a historic day, it's a major occasion in Georgia, it's indicative of some of the shifting demographics that are causing a lot of the sorting you're seeing in American politics. They're moving the two parties away from each other. Within the Senate, right, he's got to worry about his members.
At this moment, and just to take one conversation that will occur many times, how would a majority leader Schumer and a minority leader McConnell deal with a distinguished senator from West Virginia, Joe Manchin? On a day-to-day basis, John, as you lived in the Senate, how do those conversations actually occur with Manchin of West Virginia?
You know, I think the key thing to watch right now is this bipartisan gang that came out of the stimulus negotiations in December. I mean, this is a group of, you know, there's not many moderates left in the Senate right now. Manchin is, of course, in a Trump plus 40 state, so he counts certainly as a moderate. But there's this gang that got together, and they want to be the ones who put together bipartisan deals. And I think one of the challenges they're going to face is there's just not enough of them. But I think that's the vector for bipartisanship, is you've got people like Susan Collins, Mitt Romney, Chris Coons, Joe Manchin, who came to Congress to get stuff done, and they want to get together and accomplish things. Schumer's going to do his best to keep Manchin on the reservation on all the key votes. And, Manchin's going to be on Joe Biden's speed dial as well, because on every single vote that matters, where he might defect the other direction, there's going to be a lot of pressure on him from the White House to play team ball here. And he's not the only one. I mean, you've got people like Kristen Sinema, potentially Mark Kelly from Arizona.
Interesting.
Who may forge their own path.
John, if the Democrats actually win both races, are Republicans going to start blaming Donald Trump for this? And so what's his political future?
I don't see how Trump doesn't carry the blame for this. I mean, these are, Georgia's a changing state. This is a challenging election, but these should have been winnable for the two candidates who got, much like Trump did in the general election, lost in the suburbs, and they didn't have to. Those were formerly Republican suburbs that are trending Democratic, and the reason they're trending Democratic is named Donald J. Trump. So I don't see how Trump doesn't carry the blame. The problem for the party going forward is that this clearly shows the dangers of embracing Trumpism in a general election in a swing state. But if Trump really decides to go after the primaries in 2022 in Ohio and Pennsylvania, Wisconsin and North Carolina, he can make life very hard for the Senate Republicans by producing extreme Trump candidates instead of the kind of moderates you need to win in a swing state.
It harkens to the state legislature of Washington State years ago, and what I really go to as an amateur here, John Lieber, is Kansas, and what we learned from Kansas and the GOP battles, not Pat Roberts, but the rest of Kansas, if you will, over the last number of years. What are the lessons from the Kansas battles for the GOP out to 2022?
Yeah, I think Kansas is a really interesting state. You've got some people who, you've got the Republican Party repudiating some of the more extreme members of the party there to elevate kind of leadership chosen moderates. And that's going to be the fight that's ongoing. But frankly, this is nothing new. I mean, this has been happening within the Senate since at least 2010, where Jim DeMint put forward a couple of really kooky candidates in Nevada and Delaware and probably cost the Republicans a majority they should have had earlier than 2014. So, Mitch McConnell, John Cornyn, John Thune, the other leaders in the Senate, they're used to this kind of dynamic, and they're used to trying to steer and intervening in these primaries. They have a playbook now, but the wild card is President Trump. He's obviously, as we've seen over the last 4 years, incredibly hard to predict and impossible to control.
John, what will Joe Biden, the administration actually focus on if the Democrats do win these two races? Will they focus on going after, big technology companies for regulation? Will they, focus on just much, much more stimulus? Or because it's such a thin majority, actually, they'll be a lot more careful?
Because they don't have a 60-vote majority, and Joe Manchin has said repeatedly on the record over and over again that he's not voting to eliminate the filibuster, it really limits the things they can do on a purely partisan basis, and it limits them to big spending and also tax increases. So I think, but that means they can still accomplish a lot in that realm. They can do stimulus checks, state and local government support, new tax cuts, also down the road tax hikes to pay for expanded healthcare subsidies. They're not going to be able to do a lot of the things Joe Biden ran on, like a $15 an hour minimum wage. Maybe there's a compromise somewhere at 10 or something. I don't really know. But anything in the regulatory space, you asked about big tech, anything that they want to do there, they'll have to find bipartisan compromise. I don't think we're quite there yet where we can predict there's going to be bipartisan compromise on these issues, at least now. That might be something for 2022.
John, thank you so much. John Lieber, the Eurasia Group Managing Director, United States, and former policy advisor to Senator Mitch McConnell, joining us this morning. Now, up next, we track COVID-19 with Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins, of course, has been at the forefront of the international response, and every day we bring you insights from experts in public health, infectious disease, and emergency preparedness. Well, joining us now is Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, I have a million questions, and they range from, how worried are you about these new variants and the fact that vaccines could not be efficacious in combating them, or the simple logistics of vaccinating people right now. What worries you most?
I think what worries me most is that we're seeing these surging cases, and this new variant does have such a higher transmissibility, it's looking like. So as we're rolling out these vaccination campaigns, which is the good news, the bad news is that a 50% increase in transmissibility, which some of the projections have shown in this new variant, means more hospitalizations, more cases everywhere. Luckily, that variant is not showing worse outcomes yet or more severe disease yet, but just the sheer numbers that we already have right now, and that variant isn't everywhere, but we're seeing it more and more as we're doing more and more testing. It's bound to increase the number of cases, and coming on the end of the holiday season where people have traveled a lot more than I think a lot of us were expecting or hoping to see. I think we're going to see a pretty significant surge going into the new year.
Lauren, is there a danger that if you start vaccinating people just when there are a number of infected cases on the rise, that because of that, doing that at the same time, you actually end up with another variant?
I think there's always a possibility of another variant. Viruses, as they replicate, they make changes in their copies, and variants happen all the time. I think there is some worry about a potential for another variant like this one, where we see either increased severity or increased transmission. That being said, a lot of work is going in right now into assessing whether the variant impacts the ability or the coverage of the vaccine. And so right now we're hopeful that at least with this variant and hopefully with others, that these vaccines that we've worked painstakingly to create and to begin to administer will maintain stability.
Do you, again, did we underestimate the challenges of, a vaccine rollout at this scale?
I think there were some areas where we underestimated the challenges. I think one of those areas in particular is staffing of these vaccine rollouts. I have been very impressed by the management of the cold chain storage issues. I think that's an area that everyone was worried about in the rollout. But staffing, people continue to be a huge challenge. And then and how you roll out these vaccination campaigns where it's not just a jab in the arm and you're on your way. There's other elements. There's the sign up, there's the pre-screening, there's the intake. Giving the vaccine doesn't take that long, but then you have to sit for 15 or so minutes to make sure you don't have an adverse reaction. all that adds up, and all of those elements of the vaccine rollout or of the vaccine process take people to do those pieces. And so ensuring that we have the staffing to roll this out and scale it up en masse is going to be, it's going to continue to be an enormous challenge. And I think we're seeing that already in the first phases of rollout, but we will see it significantly. It will have a much more significant impact as we roll out to the general population.
Lauren, I know we're spending a lot of time talking about Georgia, the state in the U.S., of course, today. How much, different are COVID cases going up or down depending on what state in the U.S. you're looking at?
I think COVID cases are ticking up in many places, and that's concerning. We've had surges all across the U.S. Georgia is surging, and they are one of the states that has reported this new variant. So I think there's a lot of eyes on Georgia to see what their cases do over the next couple of weeks. They don't have many restrictions in Georgia compared to other states in the U.S. So I think there's a lot of worry that we'll see increased caseloads there as that variant spreads and as people traveled for the holidays with minimal restrictions and requirements.
Very quickly, Lauren, are people willing to get vaccinated in the U.S.?
I think there's a lot of people who are willing. I think there's a lot of work that we have to do in that space to make sure that more and more people come over to the side of the willing to know that this vaccine is safe, effective, and available, particularly to healthcare workers, and as availability scales up significantly, hopefully to everyone.
Thank you so much, Lauren Sauer there of Johns Hopkins. And be sure to check out VR US Go on the Bloomberg for the latest information. You can also tune in every day for exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. A lot going on with the markets. Of course, all eyes on Georgia, but a lot going on also with treasuries that seem to already have been pricing in a Democratic win for the Senate. So benchmark treasury yields touching 1% for the first time since March. Investors rotating out of technology into cyclical stocks on speculation that the Democrats are on the cusp of taking control of the U.S. Congress. More Bloomberg surveillance ahead.
quite worried about the labour market, and I think many economists are.
We're in the middle of the worst crisis of our lives.
In spite of what we've seen, equities have managed to maintain a complete disconnect from the real world.
We've only recovered 50% of the way, and we're kind of hitting a plateau.
It is important to remember that we've seen a lot of demand destruction.
There's a lot of pent-up demand, I would say, from consumers, and that money is going to find its way back into the market.
Money is chasing bad companies and bad credits. That is happening. That always happens.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. This is an historic day, not only for Bloomberg News, but all of America, including the international news flow. Absolutely extraordinary today. I'm going to get to Georgie here in a moment, but just to paint the picture of where the markets are and, of course, the political news behind it. In Hong Kong, extraordinary arrest today, accounting many tens of people. We spoke to our Hong Kong News Bureau earlier, and it is a new regime of Hong Kong arrests today. Over in England, a lockdown where the Prime Minister literally speaking at this moment on the challenges of the pandemic in the United Kingdom. And over in the United States, I mean, it's as simple as this. In Los Angeles, a dearth of oxygen. The oxygen is gone as well in Washington, and the markets react to it. Let me give you the markets first, with the yields moving up this morning, 1.01%, a little bit of moderation in the move that we saw 2 hours ago. John and Capri notes that the Russell 2000 moving smartly higher, red and green on the Dow, with the NASDAQ 100 having a challenging moment of it. Lisa Abramowitz, it is an extraordinary Wednesday for this simulcast.
Yeah, and the big question is how much of a blue wave has already been priced in, and how blue is this wave when it comes to what actually gets implemented in policy. Also interesting when you talk about the NASDAQ, how much of the sell-off in tech stocks is due to the increase in yields and how much is due to the expectation of increased regulatory pressure. A lot of questions, but it seems like people are looking at the potential for a Democrat Senate.
I mean, what we're really going to do is bring up the zeitgeist at the moment. We're going to do what we do on surveillance, which is aggregate all the news that we can bring in, of course, from Bloomberg News and others. Lisa, I just want to observe Stacey Abrams, who's clearly the darling of the moment for the Democratic Party. Her registration effort in Georgia, almost historic by a national perspective. She tweets out 6 hours ago, make it 6 hours ago, to Reverend Warnock with congratulations, and is so bold as to tweet out 7 minutes ago to Mr. Ossoff congratulating him as well. We're not there yet, Lisa, are we?
No, we're not there yet. The lead that he has over Senator Perdue is still very narrow, and I'm wondering, I mean, frankly, Loeffler hasn't conceded either yet. So we have a big way ahead of us. We're going to get a repeat of the 2020 election in terms of the contest going forward. But today is going to be really interesting, Tom, and I just want to give you a sense of what we're looking at today because we're so focused on Washington. U.S. Congress is meeting to count the electoral votes and certify the next president. Tom, you will love this. There is a box from 1877, a mahogany box. They have put the electoral votes in, and they bring them to a Congress floor to be counted. We will find out whether Mike Pence will stand up and say, I don't have the authority to do anything other than certify these results. Also today, 8:15 a.m., we get the ADP employment report. It's known to be fickle, unreliable, but still people will be parsing this to get a sense of where the jobs are, or should I say aren't. Also at 9:45, U.S. Services PMI data. I'm more interested in this, frankly, Tom, because it'll give us a sense, the high-frequency data on how much the economy is slowing on the heels of the pandemic. And then at 2 p.m., FOMC meeting minutes. I'm very curious to see how much the Fed is taking into account Atlanta Fed President Raphael Bostic's assertion that the Fed could start maybe tapering their monthly bond purchases if the economy does well this year. That certainly would be something that would come as a surprise to markets.
Well, I really like, Lisa, how you do that with the January 8th employment report as well. And what has so changed here is the change in non-farm payrolls for Friday is 73,000. That is a number that's always of angst, and certainly with the news flow that we're seeing will be closely watched. And a presumption there, I should say, a further stimulus stimulus and income replacement by a Biden government. And it's presumed now, we don't have official word on this yet, of a Democratic House, a Democratic Senate, and of course, President-elect Biden, a Democratic president. What a shift for the markets in the last number of weeks. Emily Wilkins is looking at the shifts in Atlanta and joins us this morning. Emily Wilkins, it has just been an extraordinary 24 hours in Atlanta. Tell us the difference, the parsing of Cherokee County to the north and Gwinnett, I guess, to the northeast, and this difference of exurbs and suburbs. What have you learned?
So it used to be a given that the Atlanta suburbs were a Republican stronghold, and then we started to see that begin to change. I mean, Gwinnett County, David Perdue won that in 2014, and this time we saw them go for Biden, for Ossoff, for Warnock, and we're seeing that again. We're seeing the strong diversity in Georgia come out and really help hand a victory to Democrats.
So John Ossoff, we're learning, is set to deliver remarks at 8 a.m. Eastern time. Emily, this comes after Stacey Abrams tweeted a congratulations to him. How determined is it? What is the vote count that's giving such confidence to both Ossoff as well as to Abrams?
So currently Ossoff is about 16,000 votes ahead of Perdue, and we are still waiting for more votes to come in, but it's key to look at where those votes are going to come from. They're going to be coming from Democratic parts of the state. So at this point, it does seem likely that Ossoff's lead is going to increase. One thing that we'll be looking for today, will the candidates clear the 0.5% that's needed for them to avoid a runoff, or not a runoff, but a recount?
Emily, John Ossoff is going to speak at 8 a.m., as Lisa Abramowitz mentions as well. I've just got to cut to the chase. What will you listen for from Mr. Ossoff if he's well within the recount gap where Senator Perdue would challenge the election?
We're going to start looking for Senator Ossoff to come out and start talking. What are his priorities going to be? Is he going to strike a bipartisan tone, as we saw with Warnock's speech last night? Is he going to strike more of a progressive note? I mean, remember, Ossoff hasn't held elected office before, and so there are lots of unknowns with exactly how he's going to be as a legislature.
Emily Wilkins, thank you so much. In Atlanta, and of course, the news flow this morning out of Atlanta, extraordinary. To be clear, we haven't seen AP changes in voting, I will say, over a good 2 hours, even 3 hours here. 16,000 votes separating Ossoff and Perdue, and that by no means precludes a recount, as we see with Warnock and with Senator Loeffler, where there's clearly a substantial gap there, and Warnock announced by all to be a new senator from Georgia. Right now, from the politics of the moment for radio and television, we're thrilled to bring you in London. Andrew Slyman joins us with Morgan Stanley Investment Management as we adjust and adapt to the politics. Andrew, how do you synthesize the politics, whether it's here, it's in Germany, it's Macron fighting for his life in France? How do you do what you do at Morgan Stanley in this political maelstrom?
Well, what an exciting morning to be here. Look, I think the big story as it pertains to the financial markets is the 10-year Treasury has broken 1%. Whether that's political, whether that's the story of the economy recovering, whatever, I think that's very important because I think it causes a shift in rotation in leadership in the market. So I think the political story is just part of it. I think the economy recovering, maybe it's more stimulus on the way. All those, I think, is as it pertains to the financial markets and what's going on. I mean, this is the really big story of the day.
So, Andrew, does this give more of a boost to financials, or does it create more of a headwind to tech shares? In other words, where is the biggest equity impact from Treasury yields hitting that 1% mark and exceeding it?
Well, first of all, the NASDAQ, there are parts of the NASDAQ that is in a bubble, and that is not the mega cap tech stocks, but there are a lot of NASDAQ stocks that aren't making money or selling at sky-high valuations, and those sky-high valuations become challenged as rates go up because that is their long-duration assets. So I think that is vulnerable. As it pertains to politics, if the mega cap tech stocks are selling off anticipation of higher capital gains, I would just please take a step back and take a deep breath before you overreact. because I've learned people tend to, overreact to politics. But clearly, higher rates, a steepening yield curve will help financials. And I notice they are stronger today. So to the extent someone like myself, I am a believer in the cyclical rally. I'm a believer in the reopening. You want to buy cyclical stocks coming out of recession. I've owned them, but I've watched the NASDAQ go through the roof, and that's been frustrating. Perhaps now we're starting to see this will cause a true rotation in leadership.
And just to give a bit of color behind what you're saying, JP Morgan shares up nearly 3% in pre-market trading. You said that markets tend to overreact to news. How much is the bond market overreacting to the prospect of more stimulus, given the fact that there probably also will be more regulation, higher taxes, and it's going to be a rocky road? I mean, this blue is a purplish blue.
Yeah, but there's other things. I totally agree with that. But there are other things going on. Look, I read a great quote the other day. We Americans, we have a frustrated desire to spend money, right? We're all sitting at home. The savings rate is 13%, and it's on its way to 18% with if there's another stimulus coming. We are going to spend money when we get through COVID. And so I believe, my view is the markets are going to do very well pre-vaccination, we get through, and then the markets are going to struggle because we're going to see a big boom in spending and rates are going up. And I think that's going to be more of a challenging time for equity. So I don't think it's just political. I think it's the market is starting to tell you, hey, spending is going to come. We're going to party like it's 1999.
Andrew Slyman, thank you so much for the Prince illusion there. He is with Morgan Stanley, always listening to Prince. Lisa Abramowitz, the moment is here, and I've just got to say, and to all of our viewers and listeners around the world, we love the feedback. Lisa, John and Capri emails in to say and says, hey, dummy with a bow tie, I'm going to put you on mute if you don't mention the Russell 2000. The Russell 2000 up ginormous this morning, Lisa.
Sounds like a fantastic vacation in Capri.
I don't know if it's, there he is. Coming up, we continue our coverage on Washington and we consider the challenges of the world economy amid pandemic. David Malpass joins us with the World Bank. Futures red on the green and screen. We're watching Georgia. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The Democrats' hopes of taking control of the U.S. Senate hang in the balance today. They've won one of the two runoffs that were held in Georgia, but the other is just too close to call. According to the Associated Press, Democrat Raphael Warnock defeated Senator Kelly Loeffler. Warnock is a pastor and civil rights activist who will be Georgia's first black senator. The race between Democrat Jon Ossoff and Republican David Perdue is a dead heat, with a number of votes still to be counted. Perdue's Senate term expired Sunday. Two distinctly different events taking place in Washington today. On Capitol Hill, lawmakers gather to certify Joe Biden's election as president. Some Republicans have promised to vote against it because of unproven allegations of vote fraud. Meanwhile, President Trump will address protesters calling for the overturn of his loss. Thousands of Trump supporters have gathered in Washington. And in Hong Kong, an unprecedented crackdown on the pro-democracy movement. Dozens of opposition figures were arrested under a controversial national security law. So was an American lawyer who's a member of several human rights groups. President-elect Joe Biden's choice for Secretary of State, Anthony Blinken, called the arrest an assault on Hong Kong's democracy. A surprise move by Saudi Arabia. The Saudis took charge of the oil market with a large cut in crude production. That papered over cracks in the OPEC Plus coalition, and it sent crude prices jumping to a 10-month high. Plus, shares of energy companies have surged. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Georgia, I am honored by the faith that you have shown in me. And I promise you this tonight. I am going to the Senate to work for all of Georgia. No matter who you cast your vote for in this election.
There are a lot of votes out there, as y'all know, and we have a path to victory, and we're staying on it.
Georgia is the fabric of this fractious nation, seen in those two candidates, the Senator Kelly Loeffler, Wisdom Grace, waiting to see further counts. I believe that video was from earlier, to be fair to Senator Loeffler. And then later we heard from the Reverend Warnock of the Ebenezer Baptist Church over this historic moment for the nation. Warnock elected in Georgia to one of those Senate seats. And of course, Ossoff Purdue Ossoff is still under careful discussion, even though Stacey Abrams has given congratulations to her candidate. The jury's out on that second race. We'll keep you abreast of that through the day. Kevin Cirilli is our chief Washington correspondent. His has had his spinning with 4, 5, 6, and 8 stories as well. Kevin, I've got to go to this long drawn-out process in Washington today. Is your Washington riveted by it, or is it just a process you're going to get through, say, 10 o'clock tonight?
Well, without question, the politics of this are fascinating. They're historic, and they're going to be carefully watched. But from a policy standpoint, the process is playing out. There is the institution, as outlined by the Constitution, has a process that will play out. And Tom, if you'll bear with me, we're having some very bad audio issues, but the process is playing out.
Well, we're having some audio challenges. Kevin, work with your IFB, as we call it there, and we'll keep it going here. We have an audio issue in Washington primarily because Washington and the Eagles, it didn't work out all that good for Cirilli, and that's it. Lisa, let me go to you here. And as we look at the politics of the moment, we frame a better market than 2 hours ago. It was something, Lisa, to see a 103 on the 10-year, and we've come into a better yield, 1.01%.
There's a question, though, of how sustainable this is. I mean, is this because of higher inflation expectations? They did creep up a little bit, but it wasn't a game changer if you take a look at break-even rates. Is this because of the expectation of a weaker dollar and less foreign investment, or is this going to be a buying opportunity, as a number of analysts and investors who've come on here have talked about?
We're going to get a lot of strategies here. Stephen Major really reaffirming through Stephen King of HSBC today his belief in a lower rate architecture, and David Kelly of JP Morgan posturing a medium term, yes, higher rates, but still a long-term disinflationary cycle. So much of that will be around stimulus and income replacement. Kevin Cirilli, to cut to the policy chase, how do you frame the debate in March or April over stimulus and income replacement to a beleaguered America?
Well, there are significant winners and losers this morning, even as the results are still being tallied in Georgia. Centrist Democrats, people like Senator Joe Manchin, a Democrat from West Virginia, are waking up with a lot more political capital here in Washington, D.C. They are going to be, without question, the key swing votes on fiscal stimulus, on other issues pertaining to healthcare fixes, as well as on big tech regulations as well. And so I just spoke this morning with one source in the Republican Party who noted that for someone like Senator Joe Manchin, who is governing in a state which was carried by more than 20 percentage points by the Republican nominee, President Trump. He is in a fascinating political intersection of where the country is.
Kevin, how much are Republicans pitting the blame on President Trump for the underperformance in the Georgia runoffs?
Significantly. And in fact, the soul searching for the Republican Party, which is reminiscent of any time a political party loses and has to do a diagnostic type of test, that's already been going on. For Senate Majority Leader Mitch McConnell, this is a significant opportunity, so to speak, to question what path forward the Republican Party takes, especially as it heads into a new cycle.
Who will become the Senate Majority Leader if the Democrats do clinch the Senate, excuse me?
Chuck Schumer. And so he's on the cusp of having a lot of significant power. New Yorkers are very familiar with Chuck Schumer. And again, he is someone who has walked the political tightrope of the progressive flank of the party as well as centrism for quite some time with Wall Street in his backyard.
Kevin, I'm going to give you an unfair question because it's Unfair Wednesday, and I know you're exhausted from the coverage. You've got Sound On coming up tonight. Right now, Purdue is within the recount gap with Ossoff. If John Ossoff does better, as is widely presumed, and that gap is a little bit more than the recount, is the real surprise here that Senator Perdue will graciously step aside given the news flow?
I think it's too early to predict that. You know, I think that there is still a process, and so with a 0.4% majority right now advantage going to John Ossoff, that's within the ability for there to be a recount. And so as a result, I mean, I think, you know, and you and I, Tom, have talked about this before, and I think we're all in agreement. I mean, I don't want to get ahead of anything, especially these days in which there's a lot of process that's playing out.
Well, our Emily Wilkins in Atlanta, Kevin Cirilli with the festivities of Washington. We'll look for that all through the day. And I must admit, Kevin Cirilli's Sound On Bloomberg Radio. It's been expanded to a 6-hour program. Look for that at 5 p.m. tonight. Cirilli, Sound On, and seriously on a most historic day. Important conversation with the people of Washington. Kevin, thank you so much this morning. Right now, red and green on the screen. Yeah. NASDAQ futures far better than they were 3 hours ago. I mean, frankly, Lisa, Francine, Lisa, Scene, whatever it is. Lisa. Laura, you know, Megan, whatever. I'm going to get through the day.
You could just go with you.
Lisa, the tape is better.
Yeah, things are coming back. I mean, look, I do wonder, you know, going to Andrew Slivin's point, the idea of markets tend to overreact to politics. How much will actually change with the Senate led by Democrats? Possibly a lot, but, you know, how much has already been priced in? I don't know. This is the big question of the day.
We will see. As an aside, good morning, Jeff Curry of Goldman Sachs with a bold call on commodities as well. Off of Saudi Arabia, Brent crude $54 a barrel. That's a big deal. That's a real shift, and we see it in the other commodity complex as well. Copper, I know, moving up as well. Lisa, what are you looking at in your world of high yield and IG? That's HY and IG. What do you see?
Well, that's been pretty steady and in incredibly low yields, record low yields across the board in terms of what bonds are going for. The question is, can they remain so as the economy climbs and as we get yields going higher?
Very good. Jonathan Farrow, Tom Keene, and you, stay with us as you can. Mark Cabana, Bank of America Rate Strategy will be with us. Stay with us, of course. We continue to monitor the politics of America. This is Bloomberg. Good morning.
some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Good morning. Bloomberg surveillance on an historic day for the United States of America in Washington and across Georgia, and particularly in Atlanta. We're looking for results there as well. We're going to stay on the markets. We're going to do a data check here in a bit, but what you need to know, the tape not as jarring as it was 2 hours ago. Lisa Abramowitz and Tom Keene. John Farrow is off today, although John Farrow, Lisa, notes Russell 2000 really was some of that small cap indication, and you see it now with a better Dow. Dow futures up 100 points, even with NASDAQ -4. The VIX comes in, Lisa, 24.44. That's a better tape all in all.
Yeah, and I will say, so the Russell 2000 up nearly 3% in pre-market trading. But if you take a look at financials, that's what I'm watching today.
Please.
You're seeing JP Morgan, for example, up more than 3%, 3.2% ahead of the open. And this comes as you have the biggest steepening in the yield curve. You right now have the biggest gap between 2 and 10-year yields going back to 2017. How much is inflation? How much is the expectation that the Fed will be actually comfortable allowing yields to rise over the longer term, Tom?
Barely mentioned foreign exchange, always an important issue for an incoming president, and we see that with dollar, not weaker, but nevertheless dollar pushing new weakness right now on DXY. Renminbi 6.45, of course, is always important. That's with that Hong Kong news that we saw out there earlier this morning on multiple arrests. We heard the shock from our Hong Kong News Bureau earlier. Euro dollar 123.45. Lisa, before we get to our good guest, Mr. Cabana, I want to walk through the formula, which is nominal yield higher.
Yeah.
But at the same time, inflation expectations higher, which means the real yield hasn't moved all that much, that residual. It's an interesting juxtaposition of those three numbers, Lisa.
Basically, the implication here is that central banks, the Federal Reserve in particular, will continue to buy more than $100 billion of bonds for the foreseeable future, suppressing yields, because otherwise it doesn't make sense. If you're expecting 2% inflation over the next 10 years to get 1% for a 10-year treasury, you're losing money in real terms, Tom, and that is the conundrum. The other conundrum is this a head fake, the move that we're seeing today, both in treasury yields and beyond? And Mark Cabana has been covering all things rates, Bank of America Global Research, head of U.S. rate strategy. Mark, I'd love your sense of that. In other words, yields have kind of peaked out here and could be headed lower as people reassess the enthusiasm about faster growth and more stimulus.
They could, but what we anticipate is that rates will gradually rise to around 1.5% by the end of this year. Now, we had assumed that even with the base case of a divided government. If the Democrats do end up winning both of these Georgia seats, to us, that raises the risks that you see the rate repricing occur a little bit faster and potentially higher than we anticipate. Now, there's a number of headwinds in the near term. COVID is going to restrain economic activity in Q1, but we do anticipate that as the vaccine is rolled out and as global growth and U.S. growth picks up, you're going to see long end rates reprice higher. And importantly, we think that this long end rate repricing will be due to quote unquote healthy factors, i.e. better growth, higher inflation expectations as the economy recovers. And if the Democrats win both of these Georgia seats, it naturally means more fiscal stimulus and likely higher deficits as well.
How high can Treasury yields go before the Fed steps in?
So we think that it's less about a level and it's more about the set of conditions that's pushing rates higher. If you see this, again, quote unquote, healthy rate repricing, where you see higher break evens, where you see stable to higher risk asset prices, a stable to weaker dollar, there's no real level that we think the Fed is going to grow uncomfortable with. However, if you see this rate move that is in a liquid move, or it's due to concerns over too much Treasury supply, that's when the Fed will step in. And just as you and Tom were talking about, we think that it's really all about the distribution between break-evens and real rates. If rates are rising because break-evens are widening, the Fed is going to see that as a generally healthy move, and they're not going to step in and offset it. Now, if you saw rates really quickly move to 1.5%, that would probably be a bit more than the economy can handle at present, and the Fed would need to offset that. But if it's a more gradual move, then we think that the Fed will likely tolerate and, in fact, embrace the move if it's driven by better inflation expectations.
Although, Mark, as we're seeing today in the big tech stocks and other stocks that are considered havens or other securities that are riskier that have been bid up in large part because of how low bond yields are, there is a question of whether the Fed will respond to a disruption in financial conditions, or if you want to put it more bluntly, a sell-off in anything, and step in or perhaps try to suppress yields quicker than may other be worthwhile, just to keep everything intact and make it look like everyone's happy and still getting gains.
Absolutely. So the Fed is looking at financial conditions broadly, and they do not want to see a destabilizing rise in long-term interest rates that causes financial conditions to tighten materially and that causes the economy to slow down. But are they concerned about a couple of percentage point sell-off in tech stocks when they've had such an incredible run? No, not in particular. Would they be concerned if that turned into a 20% correction? Yes. And would they be concerned if there were signs that too high of interest rates were beginning to in the real economy, i.e. slowing down the housing market, things of that nature? That's when the Fed would get concerned. But I think that seeing the 10-year yield just above 1% does not yet seem to be a level whereby those long end rates are really beginning to bite in terms of the real economy and broader financial conditions.
Mark, we're all inured to the bull market in the equity space, whether it's double-digit tech returns, even what we're beginning to see in small cap recovering so nicely. We forget that if I look at Bloomberg Barclays total return, it's been a persistent bull market of higher price, lower yield in your space. Have we forgotten what a bond bear market is?
To some extent, yes. Given that U.S. interest rates have recently been at historic lows, the equity market did incredibly well despite the pandemic, and I think that the market is going to have to adjust to the notion that long-end interest rates will be rising. Now, again, we think that this rate rise will not necessarily constrain the economy in a material way. If it does, the Fed will step in. But I think investors are going to have to get accustomed to the fact that they should expect to see at least the prices of bonds go down to some extent as rates reprice and growth and inflation does pick up over time.
We welcome all of you on this historic day in Washington. Mark Cabana of the Bank of America with us here on rates, and we do this with futures red and green on the screen, a little bit better tape than 3 hours ago. The yield 1.01%. Mark Cabana, I want you to talk to savers out there, not the fancy guys like you doing fancy hedging strategies and trying to manage with a higher price, a higher yield, lower price milieu. What does the average person do in fixed income if you're telling me higher yield and lesser price?
Yeah, so I think that if you're a saver, what you want to do is that you want to carefully think about extending out the curve, trying to pick up some additional yield based upon your own risk tolerance and your comfort level. Maybe you think about moving into the corporate space more than the government space, but you're going to have to be careful, and you're going to have to recognize that you want to leg into this strategy over time because we do anticipate that rates will be slowly rising. Now, if you're an institutional investor, what you want to do is that you probably want to hew a little bit shorter on your overall duration allocation as rates do reprice higher. Now, we do think that it's great that we're seeing rates move today, given some of the news out of Georgia and the implications that it has for Washington. But we still think that fundamentally the big rate repricing that we see towards 1.5% will likely take place in Q2 or later. Again, as the vaccine is rolled out and as we get confirmation the economy is indeed recovering.
On a price yield basis, the fancy guys talk about duration and the second derivative convexity, which I'm going to call acceleration. Guys like you call it gamma. I don't, Megan, do you know what gamma means? I have no idea what gamma means. How about convexity, Mark Cabana? What is going to be the accelerative forces as we go through 2001?
Well, so as we go through 2021, what we do think we're going to see again is that sell-off that will likely really accelerate again from Q2 onwards. Q1 is going to have a very significant headwind from COVID. We don't know how effective the antibody treatments will be to the new strain of the vaccine. We don't know how quickly vaccines will be rolled out. But after that is generally behind us, we do think that rates will need to reprice to the new reality of strong fiscal and monetary tailwinds, and the fact that we're likely going to see the economy operate meaningfully above trend from Q2 through the end of the year. And that, we think, is going to take rates higher. So we do expect to see a more accelerated move later in the year. And today, it just seems like the market is repricing a bit more to the fact that you need to assign higher odds to a Democratic control of the Senate than you did previously.
Mark Cabana, thank you so much for the Bank of America this morning. Lisa, I got to go over to you, Lisa. The fancy words here, convexity and all. The acceleration of price down and yield up. Lisa, that's positively gloomy.
Oh, I mean, it's always, everything's gloomy. You can always paint it from some gloomy perspective. I mean, otherwise, I wouldn't be true to my name. Look, I will say, looking at the bond market, there's a real question of what can drive yields higher. I mean, it was really interesting to hear Mark say 1.5%. You got to think at a time when you've got record amounts of negative yielding debt around the world that 1% will look like high yield. At what point do buyers start coming in? I don't know, Tom, that seems reasonable considering the fact that, you know, investment grade bonds are yielding 2%, not that much.
We make jokes about this, folks, but I would say that media, business media is about 85% equity markets, and they toss in a morsel about bonds here and there. But Lisa, I'm sorry, what we're talking about is yield up, whether it's the politics of President Biden and others, and price down. And at retail, it's easy. You get 3 months of your statement and you know you're losing money and you're upset. Institutionally, as Mr. Cabana mentioned, these are great challenges into, say, 4th of July.
Gina Martin Adams of Bloomberg Intelligence yesterday made an incredible point that one of the reasons why valuations of equities have looked so good right now, even though they're so high on a historic basis, is because of how low yields are. At what point do yields start to look more attractive given how high valuations are? Stocks have become the new bonds to so many investors. When does that reverse, and how much does that challenge the Fed's hand, regardless of what the economy does, Tom?
Back to the politics of the moment here, and of course last night, 10, 11 p.m., 1 a.m., some movement, well, not minute by minute, but maybe every 30 minutes we had Georgia voting results. I haven't seen any numbers since about 5 o'clock this morning, maybe even 4:30 this morning, and that's where we are now. Let me point out, Warnock takes a trophy against Loeffler. AP has announced that along with many other organizations. John Ossoff ahead of Senator Perdue now, but by a razor-thin margin, and it is a within the recount margin as well. That with AP saying 98% of the vote in. Stay with us through the morning as we look at that vote return and also the challenges of Washington. Isaac Voltansky, Compass Point, with us again. We say good morning across this nation on Bloomberg Radio and Bloomberg Television.
With the First Word News, I'm Ritika Gupta. Democrats need to pick up both seats in the Georgia runoff election to take control of the Senate. They're now halfway there. According to the Associated Press, Democrat Raphael Warnock defeated Senator Kelly Loeffler. Warnock is a pastor and civil rights activist who will be Georgia's first black senator. Meanwhile, the race between Democrat John Ossoff and Republican David Perdue is a dead heat with a number of votes still to be counted. Perdue's Senate term expired Sunday. President Trump has signed an executive order banning U.S. transactions with 8 Chinese software apps, amongst them Ant Group's Alipay and WeChat Pay. There's a catch. The order doesn't take effect until after the president leaves office, so it'll be up to Joe Biden to decide whether to enforce it. Kim Jong-un issued a dire warning at North Korea's first ruling party Congress in 5 years. He says that development plans have fallen far short of their goals, and the party would explore a new path for what Kim called a big leap forward. And a big payday for Apple CEO Tim Cook. The company says it will pay out 179% of the targeted bonuses for named officers because it had such a good year. For Cook, that means his cash bonus rises 40% to $10.7 million. In addition to his pay, Cook had a total of $282 million in restricted stock that vested during the year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
assuming that there is some fiscal stimulus next year, which probably will be necessary to continue to support the recovery. I think from the Fed's point of view, there's going to be a substantial amount of tolerance for increased fiscal stimulus, because that's really the principal macroeconomic policy instrument that exists right now.
Daniel Cirillo, always an important voice on that linkage of policy into the Federal Reserve and what we will see on Capitol Hill. We welcome all of you here on radio and television. Red and green on the screen, a better tape than what we've seen 3 hours ago. Dow futures up 53, S&P goes the other way, -9, and the VIX 24.66. We had higher yields and much higher yields 2 hours ago. They're better now. From a 103, we come into 1.01 on the 10-year yield. FX is not giving me much of a story this morning. The Saudis tell me oil should be higher, $53.61 Brent crude. On the policy moment, and we say this with Warnock winning, Ossoff Purdue is still very much undecided. Stacey Abrams has gone out to her colleague, Mr. Ossoff, with congratulations, but we're going to call that premature. We haven't seen a vote count change there in a good 3 hours. On the policy that we have wrought, Isaac Boltanski joins us with Compass Point Research. Isaac, frame what income replacement looks like under a Biden purview versus a Trump purview.
Well, we're talking about a structural shift in how Washington is going to work, right? Even with just Joe Biden taking the White House, the tone and tenor of the conversation regarding the response to the virus and our economic response was going to change. But with Democrats now, at least within striking distance of taking the Senate, the total scale and scope of the conversation will shift. And suddenly, as market participants, we need to start talking about what fiscal stimulus would look like in that Democratic sweep scenario. And it becomes not a question of if, but just how big it's going to be in the first quarter.
So what kind of scope and scale are you looking at, Isaac?
Yeah, look, I think it is a little bit premature, right? And I do want to underscore that we still don't know who is the winner in that Purdue race. But if we go down that rabbit hole of Purdue losing and Democrats taking control, I think that market participants should start thinking about a $750 billion to $1 trillion package. And that's just based on what Democrats wanted in the last package. State and local funding, $2,000 checks, and then additional unemployment insurance aid. And that tallies up pretty quickly to around $750 billion.
How much are we going to see a repeat of what we saw from the 2020 elections with recounts and contested aspects of this Georgia runoff?
Yeah, so we know that Warnock won. So let's start there. And then we go to the Purdue race. As Tom mentioned before, that race right now is so close that it's technically under the recount threshold. And so we'll have to wait and see, but it is important to note that that very easily could go to a recount. My sense is it's difficult in a recount scenario to suddenly find 16,000 plus votes, which is right now what the margin is. But I think it's important to note that there still could be some time and another round of recounts following this.
Isaac, in your wheelhouse is actually the doing of all this. There's been sharp criticism across the political landscape of the process of aid or stimulus or income, small business distribution of funds. Is that different under a Democratic regime than a Republican regime?
You know, some of the same issues, Tom, are going to be present no matter what. I mean, one of the lessons that I've had is that I've taken away from this is that our financial architecture is egregiously out of date. The trouble that we're having with getting money to small businesses or to individuals are things that policymakers need to tackle in the future, because it is downright depressing that we're still talking about sending paper checks to people in the year 2021. And so there's still going to be some governors on what is possible. But I think that the main takeaway for the market is they will move more quickly. And again, the conversation won't be if, it's just how big and what will be included.
I look, Isaac, at the process here, and with the financial experts we talk about away from the Boltanski world, they seem awfully calm about higher yields. Are you calm about the new regime of higher yields?
I feel as though folks in my seat have found a way to rationalize whatever electoral configuration being.
Got that right.
And I'm going to stick with it. And I think that, yes, what we have right now is going to be positive for markets. And here's the reason why. Tom, there is a group of centrist Democrats in the Senate. The group I refer to as the Mod Squad. We have Manchin from West Virginia, Tester from Montana, Hickenlooper from Colorado, Sinema from Arizona. That group, I think, is going to push back against some of the more expansive progressive proposals.
Interesting.
And are going to push back against the broad Biden campaign tax plan.
Just for a heartbeat there, Lisa, I thought Boltanski was running for office. I wasn't sure.
We're all running for office in someone's house. I've got to say, Isaac, there's a question, aside from what we're seeing in Washington, D.C., what Joe Biden's approach will be when it comes to China. And we could probably devote another half hour to what we've seen overnight and over the past few days with respect to the New York Stock Exchange and the ADRs and the listings and the Standard & Poor's coming out and saying they're not going to go ahead with delisting and the retracements. What do you make of all of this? How much does it complicate investing in foreign stocks that are listed in the U.S. based on the fickleness of this policy?
I believe that our relationship with China is the most important geopolitical relationship of my lifetime. And I think that there is broad bipartisan support for shifting our approach to China. I think the difference is going to be some of the tactics. I think the Biden administration is going to attempt to pull our allies into a broader pressure strategy, whereas very often the Trump administration went it alone. The net impact, I think, is going to be very similar in that we will have trade tensions and geopolitical tensions and numerous proxy battles across our financial and economic relationship. But my view is that with a broader geopolitical alliance, it could be easier for the Biden administration to get lasting change with China.
Isaac Boltanski, thank you so much. Greatly appreciate it with the Compass Point Research this morning. We do this with red and green on the screen and a challenge with the NASDAQ 100 down 2%. But as Lisa mentioned, we see bank shares higher as well. Lisa, I want to pause for 1 minute on the pandemic. I was thunderstruck by the dearth of oxygen to assist patients in Los Angeles. And even here in New York, there's this immense worry about rising hospitalizations.
Yeah, the idea that we have to get the vaccination up and running. Otherwise, we're going to get out of control with the pandemic. And I do wonder, I mean, that economic data that's going to be coming up at 9:45, the services PMI data, very interested to see how much the jobs in the services sector, how much people are not going out to eat. Because what do you do in a pandemic, Tom?
On to claims tomorrow and then Jobs Day on Friday, and we'll go beneath the headline data there at 8:30, as we always do. I want to thank Peter Hotez of Baylor College Medicine for his great assistance and perspective yesterday on this pandemic. Coming up on the growthiness of value, or the value in growth, Christopher Grisanti, MAI Capital. This is Bloomberg on radio, on television.
The biggest hurdle we've had to face is the fact that we just can't see our customers. Traditionally, we would be away 4, 5, maybe more times per year on what we call trunk shows, where we visit cities all over the world to see our customers. That's not been able to happen this year. So we were thinking of ways that we could still make that happen.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Worried about the labour market, and I think many economists are.
We're in the middle of the worst crisis of our lives.
In spite of what we've seen, equities have managed to maintain a complete disconnect from the real world.
We've only recovered 50% of the way, and we're kind of hitting a plateau.
It is important to remember that we've seen a lot of demand destruction.
There's a lot of pent-up demand, I would say, from consumers, and that money is going to find its way back into the market.
Money is chasing bad companies and bad credits. That is happening. That always happens.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. John Farrow off today. The state election heard around the world, the blue wave that wasn't, or perhaps now was. Tom, it seems like everybody is trying to shift their expectations for a more certain fiscal support package. Yeah. The news flow dramatic, and the question is how fundamentally this challenges some of the market positioning that as we headed into 2021.
I agree, and the yield just coming in, there's some it's really fragile right now, folks, in terms of those with certitude that John Ossoff is won versus Senator Perdue. Stacey Abrams, of course, putting out a tweet an hour ago on that, but the vote count by no way indicates that. We went from a what, Lisa, 1%, 0.93% up to 1 and up to 103. Right now, the gentleman from Georgia, Mr. Ossoff, slightly ahead of Senator Perdue.
Having difficulty making ends meet. Let's unite now to beat this virus and rush economic relief to the people of our state and to the American people. I will work in the U.S. Senate to support a robust public health response so that we can defeat this virus, putting Georgia's own Centers for Disease Control and Prevention in the lead, trusting medical expertise, doctors and scientists to bring the tools to bear, the technology to bear, the ingenuity to bear, and the resources to bear necessary to stop the spread of this virus, to defeat it and to get our daily lives back, and to rush direct economic relief to people who need help right now. This campaign has been about health and jobs and justice for the people of this state, for all the people of this state. And they will be my guiding principles as I serve this state in the U.S. Senate, ensuring that every Georgian has great health care, no matter our wealth. Ensuring that we invest in an economic recovery that includes all communities, that rebuilds our state's infrastructure, that lays the foundations for prosperity in rural Georgia, suburban communities, and urban communities alike. And securing equal justice for all, following in the footsteps of leaders who have departed us in this last year, like Congressman John Lewis and C.T. Vivian. I want to thank the people of Georgia for participating in this election. Everybody who cast your ballot, everybody who put your faith and confidence in our democracy's capacity to deliver the representation that we deserve, whether you were for me or against me, I'll be for you in the U.S. Senate. I will serve all the people of the state. I will give everything I've got to ensuring that Georgia's interests are represented in the U.S. Senate. I want to thank all the volunteers who poured their hearts and souls into this campaign. I want to thank my family for their support and their patience. I want to thank my wonderful wife, Alicia, who, as we speak, is at the hospital, helping Georgia mothers deliver healthy babies, helping save lives. Let's emulate the spirit of courage and heroism of those who have given so much to the health response to this crisis.
John Ossoff in Atlanta with comments there, as we heard from Mr. Warnock last night. I want to make clear for those just waking up across America, no one has called this race yet, even though clearly Mr. Ossoff and Stacey Abrams feel he is elected. He is ahead of Senator Perdue, that according to the Associated Press, but it is ever so fractionally and clearly within the recount margin, as you heard from Isaac Boltanski a bit ago. It has been a huge turnout of 4.4 million votes as well. And of course, as Mr. Ossoff does, he alludes to John Lewis. And that is the linkage of these two candidates. Mr. Ossoff out of Georgetown, interning for John Lewis a long time ago, and then on to the London School of Economics in his career in documentary film. Right now, Emily Wilkins joins us from Atlanta. Emily, I am surprised at the assertiveness of an elected John Ossoff. Are you surprised by that, or do we really not need to wait to see what the vote count is?
I think it's always good to wait and see what the vote count is. Obviously, we are not calling anything at this time. But a key part of why everyone is so confident right now is because the votes that haven't been counted yet are coming from fairly Democratic areas. And so the expectation at this point is that that 16,000 vote lead Ossoff has right now is only going to continue to grow as those numbers come in.
Emily, what are people saying in terms of why turnout the day of the election was perhaps disappointing, why it led to fewer Republicans turning out than expected?
A couple different reasons here. I mean, number one, let's remember that more than 3 million people did vote early. That just means that fewer people are there to vote in person the day of. Another thing that we're hearing, there's a lot of finger pointing going on right now at President Donald Trump, saying that his constant talk about fraud led to voters staying home, particularly in really red areas of the state.
What do you see then, Emily? I want to move from Atlanta to your Capitol Hill with your daily coverage of the white marble. What do you see occurring for the Republican Party? Not now and not on this historic day for Senator McConnell, but what does the Republican Party on Capitol Hill look like in March or April?
I think both Republicans and Democrats have reckonings within their own party that we are going to be seeing them deal with within this next Congress. For Republicans, it's a question about where do they go after Trump leaves the White House. You still see a number of lawmakers who are supporting Trump. You're going to see today a number of them support the president's unsubstantiated claims of fraud in the Capitol. For Democrats, you're going to see a push and pull between the moderates and the progressives. Progressives say, hey, if Ossoff wins, we have all three chambers. We have the keys to the car. Let's go. Let's spend this political capital. Let's get it done. But you have moderates like Manchin, like John Tester, like the two senators from Arizona, and they aren't going to allow an incredibly progressive agenda to go through.
Emily Wilkins, thank you so much. And Tom, I will say, talking about the keys to the car, I heard that Mrs. Keene, not too keen on you getting the keys to the car. Am I correct?
No, that's not going to happen.
Meanwhile, we are seeing a shift in the markets, very much so on the heels of the expectation of a blue blue wave. So even though there is some disagreement, or perhaps there is the confirmation of a blue sweep in Georgia that seems to be increasingly priced into markets, which raises a question: have markets gotten ahead of themselves in terms of what they're pricing in, and what exactly are they pricing in? And Chris Crisanti of MAI Capital, he actually came out and said, I do think we may be setting up for the biggest buy the rumor, sell the news market of my career. He joins us now as Chief Equity Strategist. Chris, what did you mean by that?
Oh, well, Lisa, I think that the momentum in the market, regardless of whether John Ossoff prevails, continues for the moment. And because I think people are looking forward to a recovering economy and getting back to work and getting back to normal. But once that happens, I don't think it's all going to be kind of rainbows and unicorns. I think people will look around, see slightly higher rates. I think they're going to see an economy that's still struggling to get on its legs. And so that's why I say I see momentum continuing until we finally get to what we think is the promised land, and it may be not as great as we hope.
Chris, good morning. Tom Keene in New York. I really want to dovetail off what Gina Martin Adams of Bloomberg Intelligence said, which is that corporations will adapt. Do you see a malleability of C-class officers to adapt and adjust and continue to drive earnings?
Oh, absolutely, Tom. I mean, and it's been a great Darwinian process over the last year of those that were able to adapt have done pretty good to really good. We've accelerated trends. I don't think we're going to go back to the pre-COVID world. I think those who were malleable and adapted to a much more digital world are surviving and will continue to thrive even after the pandemic is in the rearview mirror.
Can you still own tech? You did so well with big tech for so long. Can you still be there?
I do think you can be there, Tom. There are different trends in tech, like we like the evolving complexity of semiconductors, for example. There's investments there for the next 5 to 10 years that I think you can still make. The cash flow of these market leaders in tech, the FANG stocks, are high, but they're not astronomically high. We're not talking about the Teslas and the new IPOs where you really do see kind of a bubble. I'm talking more about the companies. Hey, the FANG stocks are 22% of the market cap of the S&P. That's huge, but they're also about 20% of the cash flow of the S&P. So that's not really out of whack.
Meanwhile, people are putting their faith in financials this morning as the yield curve steepens to the most since 2017. I'm looking at the gap between 10-year and 2-year Treasury yields. How much more steam do you think there is in the financials rally, given this new enthusiasm for perhaps a bit more inflation?
It's funny. I think that your previous guests have been right in that the change of the Senate doesn't matter all that much because it will remain moderate. Having said that, I think we're more likely with the Democratic Senate to spend more money. I think you'll see that effect on the higher rates, especially as the economy gets going. So I think there is steam there, and I think financials can kind of make up for their poor performance in 2020 in 21.
Well, so this is a key point. You say more spending, and the matter is that it does matter where that spending is, right? I mean, if they're just direct checks to consumers that will go into discretionary spending, if it's to state and local governments, it might not be as direct into those names. I mean, how much are you adjusting your thesis based on the nature, the composition of some of these fiscal stimulus plans?
Well, I think that's an important point, but I also do think it's even simpler than that. There's just going to be more spending under a fully democratic Congress. It'll be easier to get an infrastructure program through. It'll be easier to get state and local support through. So we would suspect that the stimulus we saw last year will continue for much longer than it otherwise would have. And I'm afraid more towards the end of the year when that runs out and there's a lack of enthusiasm to renew it because the economy really is coming back. So you'll have high rates and a lack of stimulus, and that's when I start to get worried.
Chris Crisanti, Investment 101, is this a time for stock selection or is it a time to buy an index?
No, Tom, you're asking a priest whether he believes in God, but I think that here we are. Stock picking did awfully well last year.
Yes.
And I continue to think that last year was an aberration, and this year will be an aberration. We're expecting the highest GDP growth since the 1950s, really just as a snapback. So in that exceptional environment, I think active stock picking is by far the better choice.
Well, is active stock picking including Apple? Mr. Cook got a raise in $200-some million in restricted stock today. Do you want to benefit from the Apple juggernaut?
I'll tell you, Tom, I'm cooling on Apple in terms of pounding my table on it. It's a wonderful company, terrific management. I won't begrudge Tim Cook any of the millions of dollars that he's making. But what I would say is at the end of the day, it's selling iPhones. And iPhones is an economically sensitive thing. It also has competition. It's hardware. So I would prefer other of the FANG group that have much more asset-light setups than an Apple at 30 times.
Chris Cassani, thank you so much with MAI. We greatly appreciate it this morning. Just a really interesting stock selection and sector selection ideas there. So, Lisa, open question. What do you see on the Bloomberg terminal right now? Help me.
By the way, Tom, that's the best line ever. You're asking a priest whether he believes in God when you're asking.
Oh, I know. I was busting his chops. He knows I'm busting his chops.
It's fantastic. I love it. I got to say, I'm watching the yield curve because that determines so much of the financial performance. The idea that you're getting this steepening, this dramatic steepening.
What are you seeing in other yield curves? Get away from the vanilla 2s, 10s. Abramowitz keeps 42 yield curves on her screen. Which one matters?
You're painting me that exciting, huh?
Well, you can bring a bar conversation to a dead halt talking 5s, 30s. Which one do you like?
You're seeing steepening across the board. I mean, that's definitely true, although it's much more in the 2s, 10s. For example, I'm looking at the 30s and the 10 curve. Basically, what we're seeing over the next 10 to 30 years, those disinflationary trends not going away, not being priced out of markets based on the expectation for more fiscal support. So even though you're getting a bit of a lift there, not to the same extremes that you're getting in that benchmark vanilla, to use your word, yield curve. Tom, again, this comes down to if you put more fiscal stimulus into the market right now, is it really a game changer when it comes to long-term growth, when it comes to how much debt we have out there? Jury's still out.
Folks, can you imagine on radio and TV what you just heard? Lisa holding court at Bemelman's at the Carlisle Hotel on Spread Market. I mean, Lisa, the whole place, Lawson Harris would stop playing piano. The whole place would go to a complete silence listening to you on 530s.
Because I'm just that riveting, huh? It's a party animal here with the yield curve.
I have no idea what you said other than the yield curve steeper. Maybe Michael McKee will give us some wisdom here as well as we look at economic data coming up. And of course, futures at negative 25. Dow goes the other way, up 12. SPX at negative 12. I was looking at the spread between, talk about spreads, the spread between Standard & Poor's and Dow is 25 points.
Tom, you want to know what else? We have also the China yuan. We'll talk about that coming up.
We'll talk about the UN and the yuan and the renminbi and the rest of it here in a moment. Right now with our first labor report of the week, Michael McKee.
Tom, we're watching at this point for the ADP numbers to come in, and of course everything comes in now on the internet.
Who do we blame?
So it's a little bit slower, but we just got the numbers in here. ADP says we lost 123,000 jobs in December. This is the kind of risk that we've been talking about in terms of the yield curve steepening. Do you hold that 1% number or do you go below it? There's a lot of political risk, a lot of economic risk out there right now, and this may have an impact. 123,000 jobs lost according to ADP, 13,000 in small businesses, and 147,000 in large businesses.
Translate that, Michael.
The large businesses are basically those with over 600 employees. So some of the biggest ones not adding workers, it appears. Goods producing, natural resources, construction, and manufacturing losing 18,000 jobs. And in the service industry, this is what you'd expect, down 105,000 jobs as governors and mayors shut down restaurants and retail stores and gyms and things like that because of COVID. So this is going to set the stage for real groupthink in terms of what happens on Friday with the payrolls report. ADP has run below. You take a look at the chart. ADP has run below private sector hiring since we got out of the big crash in jobs in April. And so maybe we're not looking at 100,000 jobs lost, but when you look at the numbers for the non-farm payrolls for Friday, they've been coming down every month since that big gain in May. And right now we're only looking at 50,000 private sector jobs. This may drive us even lower. And if we get a negative print on Friday, do you hold that 1% 10-year yield?
And Lisa, within the whipsaw of this, I want you to go to Michael on this with your observation, but we may go below a 1% on 10-year yield. We're not there yet.
No, and actually that's exactly where I wanted to go, this idea that the bond market's not responding as much as people would think, or at least I would think, based on the fact that this really does suggest the reality of the potential for a negative print on Friday. Mike, are these numbers reliable on any level?
They're generally reliable in terms of the trend. I mean, again, if you look at the chart, you see that ADP has been dropping since May, and so have non-farm payrolls. And so the trend is something that you can maybe say is somewhat correlated, but the actual numbers are not. ADP coming in higher than the non-farm payrolls numbers over the last several months. So you can't put 123,000 into your models, but you can ask if it influences the overall trend direction.
Mike, we haven't had enough love from you this week. We're all wrapped up in politics and markets and the rest of it. I have to have you comment on the governor from Atlanta, the president from Atlanta, Mr. Bostic's comments on a Fed that may act sooner than later. Do you buy it?
No, I don't. The question, Tom, is not going to be whether they raise interest rates. It's a question of what they do with the QE purchases. And if he can sustain the 1%, it becomes a question of how fast does it keep rising and how far does it go. If that's the case, then the Fed, if it stays over 1% by January 27th when they have their next meeting, then you might see them say something about changing the weighted average maturity of their $80 billion a month in QE purchases. They might buy more at the long end to cap those rates. That'll be the first step, but it doesn't look like that's going to be happening anytime soon.
Michael McKee, our Chief Economics and Policy Correspondent, of course, a huge 200,000 gap almost from 75 plus. ADP disappoints with a negative 123. Claims tomorrow, and then Michael McKee on Friday with a jobs report. Right now, Terry Haynes joins us with Pangea Policy, and he is wonderful, folks, on parsing the middle ground of his transfixed Washington as well. We've been talking all morning about the new middle ground, Terry Haynes. Is it a bunch of baloney, or is there actually going to be a middle in your Washington?
Well, I think there is a middle, Tom, and good morning. But the middle, I think, is going to be, with the exception of spending and COVID-related stimulus, the middle is largely going to be very muddled and dysfunctional. There are four coalitions, not two political parties: Democratic progressives, Democratic centrists, Republican conservatives. They find ways to work with each other on fiscal stability. The rest of it, they really don't. And I think it's very difficult. You know, when you have, particularly in the Senate, everybody likes to talk about a 50-50, but as even senators themselves had said before this, the Georgia elections, that a scenario like that empowers everybody, which makes it much harder to come up with anything. So I think you don't see a lot of consensus in the next 2 years. Markets, after the initial shock here, I think markets generally start to understand that, and understand that you need to parse through individual investments or individual plays, frankly, to figure out whether what's going on in Washington is real or whether it's smoke and mirrors.
And just to that point, Terry, just want to point out, as Tom was mentioning earlier, the 10-year yield has been flirting with dipping below 1%, moving below 1% after that disappointing ADP figures. So you are getting a bit of a rethink of some of the knee-jerk reaction immediately. We were talking earlier, Terry, with Isaac Boltanski, and he said that the Democratic taking of the Senate ensures or makes it much more likely that a $750 to $1 trillion fiscal stimulus gets passed in the near term. Do you agree with that?
I think Isaac is very smart, and I think my number has been 500. I certainly think it's larger, but I think it's very hard won, very difficult. By March, if you are likely to see mass vaccinations, the threat of the virus lifting, all the rest, I think my scenario is more accurate. If you see continued in the first 2 months of the Biden presidency, continued dysfunction, really choppy and uncertain, then I'm more inclined to go with a slightly larger number. Yes.
Terry, in the Senate, the Southern senators were notorious for Seersucker Thursday, which had to do with a lack of air conditioning and the deadly heat of your Washington. This is years ago, folks, where they'd have Seersucker Thursday. Is the Trumpian Republican Party, do you just perceive it as a Southern party now?
No, I don't at all. They clearly have their work cut out for them in the suburbs, but I don't see that at all. I see, in fact, somewhat resurgent in the North in a truly national political party. But I've never thought of Trump and the Republicans as the same thing. When it was in Republicans' interest to work with Trump, as on tax, they did it. On a whole bunch of other things, they didn't do it. And, and you still have a lot of things here that are very bipartisan in Washington, like trade, which I think people both understand and forget about. But how Democrats will see this was already discussed. It'll be, happy days are here again, and let's go spend our political capital. For Republicans, this is, look, net, we did a whole lot better in this election than we thought we were going to, and we can crash on and recapture majorities in both houses in 2022 and set ourselves up for 24. That sort of self-interest is exactly the kind of thing that makes it a whole lot more difficult to get much beyond the fiscal done in Washington over the next 2 years.
Much beyond fiscal, you're talking about raising taxes and potentially increasing regulation on tech. In other words, is that less likely to be a headwind than people think based on the lack of an overwhelming consensus or an overwhelming majority in Washington?
Yes, I do. I think the vast majority of that stuff is political risk. I think the threat of regulation is real, largely because that can be done, obviously, without the Congress, number one, and number two, because there'll be less congressional oversight. But I think the vast majority of that stuff is significantly overblown. Yeah.
Terry Haynes, thank you so much. The Pangea policy, very, very sharp. Again, as I mentioned, on the middle ground of all of this discussion is well, Lisa, I see an improved tape. It's all there is off of 3-4 hours ago. I'm really not sure with the news flow why we're digesting this potential Democratic Senate, all the changes, the history today on the certification vote. But, the yield is the yield, and the yield says it's a better yield, 1.03 into 100.
Yeah, well, I was thinking you say it's a better tape across the board, and I'm looking at big tech in particular. And I think, there are a lot of people, Tom, like you, who are looking for an entry point. Have you found one yet?
No, I'm not found it. I'm looking at BitDog as well. 34, make it rounded up, 35,000 on Bitcoin. I believe I heard Matt Miller's over in Berlin. He's going to buy Austria today or something.
Oh, yeah, is that so?
Proceeds.
You can buy an entire seersucker outfit for the entirety of Congress for Thursday.
I said this the other day, Lisa. Come on. Scarlet Fu had the question of the year to Scott Minerd. Where's Bitcoin going? And he made world headlines with a 400,000 quote.
Yeah, he said if you look at fundamentals, and it was sort of this funny idea, because how do you look at fundamentals for something that's this sort of mercurial concept where you cannot buy a seersucker suit with Bitcoin, that I know of anyway.
Up $1,002 as well. We need to reset here. Let's reset on the economics of Michael McKee. That's been the news in the last hour. Lisa, really quite a surprise with that negative statistic on ADP. You wonder what it means for claims.
Yeah, basically, this is the first U.S. private jobs decline since April. Tom, and this comes on the heels of a worsening pandemic, and a lot of people shrug off ADP numbers as really noisy and not necessarily cohering with state figures. That said, it doesn't bode well for the labor market at a time when so many people, are you going out to eat still? Are you going out and sitting in the cold? No. Are you going out and doing activities as the virus counts increase?
To our listeners and viewers, all I can tell you is New York, it's not as bad as March and April, but we're creeping there closely, Lisa. And of course, Francine Lacroix stating the challenges of London in the United Kingdom as well. Futures at -7. Dow futures go the other way, up 39. Better NASDAQ 100, down 153 NASDAQ 100 points. Coming up on the global pandemic and the World Bank response, their president, David Malpass. Stay with us. This is Bloomberg.
se logra una sonrisa de parte de cada persona que utiliza el dispositivo, ya que se pone en situación, entre comillas, de una persona discapacitada. Y ven que lo sorteamos de una forma agradable, porque el simple hecho de sentarse en un dispositivo ya es agradable.
Nace MAT como una solución de movilidad a personas con discapacidad. Nace Mandados como una opción de generación de ingresos y nace MAT Tools como generación de ingresos y educación a las demás personas que no están en silla.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds. And that would put more downward pressure on long-term interest rates.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg Surveillance, good morning on what, without question, an historic Wednesday. Kevin Cirilli in Washington. Emily Wilkins is in Atlanta as we look at the Georgia results. That's been our theme through this morning. We just heard from Mr. Ossoff as well as Mr. Warnock last night. Mr. Warnock clearly winning. Mr. Ossoff really indeterminate right now with Senator Perdue. They're well within the recount margin. Lisa, the market's reacting to all this and then whipsawed by that ADP report.
Yeah, the idea that yields came back down, basically flirting with going below that 1% level. And the interesting thing is, Tom, you saw an almost direct correlation with an increase in the values of tech stocks, basically a retracement a little bit from the lows in futures ahead of the open, this idea that perhaps we're not entering a new yield regime just yet.
Right now, an important interview, an important conversation with a friend of this show, David Malpass, of course, with more than a decade of service to what we've done at Bloomberg Surveillance and Wisdom and Perspective, and now holding court at the World Bank as their president. David, I know you never thought you would see the challenges of this pandemic. I talk of the pandemic partition of, say, American inequalities. Tell us the World Bank's pandemic partition. What does it look like?
It's the same or worse for developing countries and for poor countries. That takes the inequality is two kind of different factors. One is poor people are worse hit by the global recession, the shutdowns, and the pandemic itself. So they feel the brunt of that. And then the second part is that the advanced economies have been doing stimulus programs that concentrate on people that already have assets. That's the central bank purchases, but it's also the fiscal stimulus from the Treasury Department.
David, the focus of the World Bank for years has been on what I would call a third world, a frontier economy. I know those are not correct phrases in 2021. One of the great issues we have is the countability of cases, deaths, and hospitalizations across Africa. Explain the pandemic for Africa right now and the veracity of your data at the World Bank.
You know, this is a cloudy area, Tom. The death statistics aren't that well kept and aren't that current, and so it's hard to tell how hard COVID is hitting people in Africa. The original in the middle of 2020, there was the sense that it wasn't hitting as hard. It's different country by country. For example, South Africa has been hard hit, but other countries seeming to be less so. But now our sense is that it's spreading and hitting all countries. What we want to do on vaccines is have vaccines available for everyone, including and especially the poor. And so that's one of the challenges, to have systems that can actually deliver enough vaccines.
That's exactly where I wanted to go, especially given some of the delays that we've seen in the developed world. How worried are you about the time frame for distributing the vaccine in the developing world?
Hi, Lisa. What the World Bank has done, we passed in October a $12 billion package through the board, and that's available. And the first step is to assess countries and see what they need in terms of a cold chain, in terms of identifying the people that need the vaccine the most. So that work is underway in 100 countries. And then the next step is actual contracts. One of the challenges is to have a common contract where people can see the same terms and actually operate on them. And so we're working on that. And then another immediate problem is indemnification. Pfizer has been hesitant to go into some of the countries because of the liability problems, or they don't have a liability shield. So we work with the countries to try to do that. But I think also some of the other vaccine manufacturers may be able to go into countries because they're operating through subsidiaries. This is all something that we're exploring, and my goal is to have vaccines available for people throughout the developing world based on what their countries decide. We've got financing available, but the countries need to choose systems and then begin buying or receiving the vaccines.
We're speaking with David Malpass, World Bank President. David, you talk about how the programs that have salvaged the global economy have really benefited the wealthiest individuals who have assets, not so much people at the bottom, and this has to do with economies as well. How worried are you about the overhang of debt in the emerging world as we do get this ongoing economic pain without a vaccine distribution model that seems to be taking course quickly enough for many people's tastes?
It's challenging to keep private sectors open. What we've tried to do through the IFC, the International Finance Corporation, the private sector arm of the World Bank, is to provide working capital and trade finance so that the private sectors that do operate in poorer countries can continue to operate. But a challenge in the world, given that interest rates are low for a long period of time, and that's being accomplished in part by borrowing short term and having the governments invest long term. Think about that. The central banks borrow overnight money and put it into long term bonds. That disadvantages the small businesses because they need that money. The overnight money is what they live on in terms of working capital. And so it's not just in the developing world, but in the advanced economies, the dichotomy, the inequality that comes out of that is a big challenge because you're losing the small business sector of the world.
David Malpass, I've got to digress to U.S. politics. You, of course, provided public service to the nation working for President Trump. I believe now there's going to be a new relationship of your World Bank and President Biden, and, of course, the International Monetary Fund, kitty corner to you there, to the west of the White House. David Malpass, how do you adapt, adjust, or you're oblivious to a new U.S. administration?
Not oblivious. The U.S. is our biggest shareholder, so we're very aware of what their interests and goals are, as we are of other countries, the developing countries included. You know, one of the big voices within the World Bank is the voice of the developing countries through our board of directors. So we listen to all parties, and we've been successful in the past in working across the aisle in all of the major shareholders. So I expect that to continue. One area that that where the U.S. I think will be supportive of the climate policies of the World Bank. You know, the World Bank is the biggest international financier of climate change activities. For example, in the poorer nations, they need to adapt to climate changes, and we put a lot of funding into that. So I think we'll see strong support from the U.S. on that kind of agenda as well. So I'm looking forward to working with the new administration. But we're non-political, so I want to see people in developing countries do better. That's the goal and the mission.
Well, when you talk about being apolitical, it still puts you into a somewhat sensitive place a lot of the time. And I'm thinking of some of your comments about China and how they hadn't been aggressive enough, in your view, with debt relief for poor nations, given their primary role over the past few years, extending debt to these countries. Do you feel like they have gotten better with debt relief? Has your view changed at all over the recent months?
Well, they've been changing, and they're a full participant in the G20, the group of 20 major economies. And so during 2020, I was happy to see, I went forward along with Kristalina at the IMF with the idea that there should be a moratorium on the payments by the poorest countries to their creditors, the official bilateral creditors, of which China is the largest, and also the private sector creditors. So China subscribed to that and is trying to move in that direction. So I don't see that there'll be a change in that. I think the big countries want to find a way to work on this debt overhang. It's very worrisome because it's hard to invest into a poor country if so much of their resources are having to go to repay past debt.
David Malpass, folks, has one of the most famous charts in the history of everything I've done, and that is gold in yen terms. We're not going to ask him for a market call as president of the World Bank, but I am, David, going to link it into your knowledge at the World Bank about the commodity nations. Can you call a turn for the beleaguered commodity nations? Are they finally going to see a bid on their various commodities?
Tom, this is a core, we have our new global economic prospects report that just came out yesterday. So we addressed some of the outlook or the forecast. But one of the unknowns, I think, is as the central banks have created stimulus, what's the mechanism for that? My view is it is not money printing that they're doing. What they're doing is buying duration. So they borrow short term and buy long term assets. That by itself is not inflationary, and the forecasts that people have of the inflation outlook still don't show that there would be inflation. So a concern for commodity producers is they do better in a red hot world, where there's inflationary pressures, and right now I'm worried about. I think the bigger challenge is to get enough GDP growth, meaning nominal supply, the production side of the global economy up and running and recovering.
We're going to end this interview because I'm going to ask David Malpass for a renminbi call, and his people are going to be very upset. David Malpass, thank you so much. He is president of the World Bank in this changing world as well. Lisa, I look at red and green on the screen, and an improved tape off 3 hours ago. We got to cut to the chase. We're looking for election results from Georgia, aren't we?
Well, yeah, and basically the Democratic wing of the Georgia party has been coming out and saying that they are victorious, but we're not getting those vote counts just yet. And it does seem like in the Ossoff Purdue race, it's still too close to call, at least from a major organization standpoint.
Some of the districts, I know the New York Times has calculated 73,000 votes still out there, and there's a real belief that many of them will tilt towards the Democrat, Mr. Ossoff. We will see how that unfolds through the morning. Speaking of Atlanta, Jody Guest, Emory University and the Rollins School of Public Health on your pandemic. On radio, on television, stay with us. This is Bloomberg.
With the first word news, I'm Ritika Gupta. Democrats need to pick up both seats in the Georgia runoff election to take control of the Senate. They're now halfway there. According to the Associated Press, Democrat Raphael Warnock defeated Senator Kelly Loeffler. Warnock is a pastor and civil rights activist who will be Georgia's first black senator. Meanwhile, the race between Democrat Jon Ossoff and Republican David Perdue is a dead heat, with a number of votes still to be counted. Perdue's Senate term expired Sunday. In Washington today, President Trump will address thousands of protesters. They've gathered to call for the overturn of his election loss to Joe Biden, just as Congress meets to certify the results. Normally that's a pro forma matter, but a number of Republicans plan to protest the results in some states because of alleged voting fraud. The move is seen as largely symbolic, with little chance of success in the Democratic-controlled House. And President Trump has signed an executive order banning U.S. transactions with 8 Chinese software apps, amongst them Ant Group's Alipay and WeChat Pay. There's a catch, though. The order does not take effect until after the president leaves office, so it'll be up to Joe Biden to decide whether to enforce it. Kim Jong-un issued a dire warning at North Korea's first ruling party Congress in 5 years. He says that development plans have fallen far short of their goals, and the party would explore a new path for what Kim called a big leap forward. And a big payday for Apple CEO Tim Cook. The company says it will pay out 179% of the targeted bonuses for named officers because it had such a good year. Now, for Cook, that means his cash bonus rises 40% to $10.7 million. In addition to his pay, Cook had a total of $282 million in restricted stock that vested during the year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
toughest task that the new administration has is continuing to march forward to make progress on getting the vaccines distributed so we can get to the other side of the virus. There is going to be a lot of discussion about what additional stimulus is needed, but I think the big focus right now is we've got to get people vaccinated. We've got to get to the other side of the virus.
Getting to the other side is the key. That was David Solomon, Goldman Sachs Chair and Chief Executive Officer, speaking yesterday with Shonali Bosick of Bloomberg TV. Coming up on The Open, Henrietta Treyz, Veda Partners Economic Policy Director, joining us to talk about the implications of the Georgia election results. Tom, it is looking like it could very well be a Democrat sweep, which was actually the less expected outcome from this election, but would give Democrats the majority in the Senate, a potential game changer, at least when it comes to the prospect of how much fiscal support is pumped into the U.S. economy.
We at Bloomberg here looking at the results tick by tick, and we haven't seen results here for a good 3-4 hours as well. Mr. Ossoff, 50.19%. Senator Perdue, 49.81%, but within the recount statistic as well. She is in Atlanta. And yes, she's watching the political storm, but mostly she is focused on the extraordinary pandemic that we are all living. Jody Guest is with Emory University, her leadership at Rollins School of Public Health, not only on the fancy word epidemiology, by getting the word out. Her teaching awards speak volumes about yell loudly and get this fixed right now. Dr. Guest, thank you so much for joining us. Peter Hotez of Baylor Medicine was so upset yesterday about the slowness of the vaccine. What do we need to do to make you and Dr. Hotez happier about getting this vaccine out there?
I think that there are two things. It's so important to get this vaccine out. First, we need to make sure that the American population and everyone around the globe trusts that this vaccine is the right thing to do for them. And so that's one issue. And then the other is the logistics of a rollout of a vaccine strategy that we've just never seen the likes of, to try to vaccinate the entire globe almost at the exact same time. And so that's logistically a massive challenge that we've not yet tackled.
My experience of the philanthropy, and I mentioned Bill and Melinda Gates and what they've done for microbiology and virology as well, or frankly for public officials, is a rollout of a medical solution takes money. Is that all this is about?
I think it's money. In the United States, the states individually are responsible for vaccine rollout, and they weren't given enough money to staff correctly. And the leeway of time to plan this was not super long. And so while they were trying to test and control the virus in the state, we also needed to be putting together a very big infrastructure for rollout of vaccine. And so we're behind on that part. I do think that once it starts working well, you'll see it exponentially pick up in its speed and efficiency. And we're all really hopeful and waiting for that.
Jody, I look at, and this is a delicate question, folks, and I say this with great respect to all the people that have helped us on surveillance during this pandemic. Is there an arch medical timidity now that we're so worried about risk and the secondary and tertiary risk to a process that we're literally afraid to roll out a vaccine and put the needle in our arms?
I think that the science communication about this vaccine has not been always positive and has not been as straightforward as we needed to have a lot of trust consistently across all communities in the United States with this vaccine. And I think that that's really where we're seeing some timidity, to use your word, coming from. And we do need to work on that.
Is there, for a pro like you, and you've seen it all, is there a tangible shift from a Trump administration to the Biden administration, or is that just wistful thinking by the medical community?
I don't think it's wishful thinking. I think that so far what we've seen is some incredible public health folks being put in place who we know and trust and know in front of everyone are really straightforward, one consistent message about what we're talking about with this vaccine and how important it is for all of us to have trust in this and to make the right decision for us personally, but that it's going to take a large percentage of us to want to take this vaccine and then get it to get back to our normal life that we all want.
Jody, you are in Atlanta. I want you to defend right now Atlanta 30341, which is the CDC. Folks, a million years ago, it was my fondest hope to possibly get a job someday at CDC. They have had a tough couple years. Defend the institution you know so well.
Oh, their incredible minds are there. They have not been as vocal as we would like about this pandemic, but that is not because they're not doing good work. That's because public health has been made so bipartisan, and CDC has been caught in the middle of that. There are incredible people who've consistently done wonderful work during this pandemic at the CDC, and we're hearing from them again, and we're about to have an incredible leader at the CDC, and we're really excited to have them leading us again through this pandemic, as they should be.
Dr. Guest, thank you so much. My advice is steer clear of politics today. From Atlanta and Emory University, Jody Guest joins us this morning. Here's what I want to do. I want to do a cross-data check, but I want to do it backwards today. I'm going to go to commodities, and of course, the Saudis making a demand cut statement, supply cut statement, rather, 54.05 on Brent crude, up 44 cents. West Texas above $50 a barrel. You go to the commodity lift we've seen in copper. You heard Mr. Malpass of the World Bank talk about commodities and the need for global GDP. Dollar weaker with some dollar strength in the last hour. Euro dollar signals 123.25. Yen, well, a weaker Japanese yen over the last 2 days, 103.17. We'll leave it at that. Sterling, I'll do for Francine, 135.87. In the equity markets, John and Capri notes the Russell 2000 on fire. The Dow up 53 futures points. SPX goes the other way, negative 11. But it is the yield space that everybody's watching with the politics of the moment. 1.02% on the 10-year yield. The 2-year doesn't give me much. Well, a little bit higher 2-year yield as well. Curve steepening and the real yield pretty much status. It is the politics of the moment. We will wander through the day with our Kevin Cirilli, David Weston, I should say, with Balance of Power at the 12 noon hour, and Kevin Cirilli on Bloomberg Radio with Sound On with a special report tonight at 5 o'clock as we look for more results on now that single Senate race in Georgia, and that says nothing of the history to be made today in Washington, and we'll have coverage of that as well. We will continue the dialogue forward on the American corporation as they adapt to the pandemic. And one of the people that can do that is David Zaslav. He is with Discovery, their president and chief executive officer. This is fascinating. I've really been off the mark here on talking about American corporations and the challenge, the changes that they're seeing and use of technology in this pandemic. And that, of course, is David Zaslav's wheelhouse as well. Thanks to Emily Wilkins in Atlanta. Stay with us through the day on this political moment on radio, on television. This is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
For our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the open starts right now. We begin with the big issue. Markets grappling with the possibility of a blue sweep.
With respect to the Georgia runoff,
it's a wild card.
This is clearly what markets and equity markets in particular are looking at.
A Georgia victory for the Democrats. With or without Georgia, you want to be adding back to value, to cyclicals.
We get a Democratic sweep.
Needing more in the way of antitrust legislation. Perhaps his regulations against technologies.
You might see some hit on big tech.
More in the way of antitrust legislation.
More fiscal stimulus.
That's really going to put pressure on the background of the curve.
Volatility in the markets.
You'll have probably a lot of repricing.
It's an immediate reaction to what is unfolding in Georgia.
Let's bring in the Bloomberg team for more. Emily Wilkins joining us down in Atlanta. Kaylee Lyons here in New York on the markets. Emily, let's start with you. John Ossoff, the Democratic candidate for senator, has declared victory. Have we heard anything from the official sources solidifying that it is two Democrats winning those Senate seats?
Not yet, but here's the key, and this is why Democrats are so confident right now. Most of the votes that we still have left to count, those are coming from very Democratic areas. So a lot of people are actually expecting Ossoff's lead over Perdue to expand as more votes come in throughout the day.
So are we getting a sense, Emily, of who is to blame for the Republicans underperforming, or is it that the polls, which everyone had discounted, were actually correct?
A lot of people have started pointing the finger at President Trump, including a number of Republicans in the party. There are concerns that his constant talk about fraud led a number of voters to not even bother to go to the polls yesterday, and turnout was key in this election.
So can you give us a sense, Emily, of how big of a deal this is in terms of what it means for the Senate?
This is huge. This means that Biden has more leeway to get his cabinet members through. This means that America can expect to see another stimulus bill. This means that Democrats have the chance within the next 2 years to pass some major legislation. Although we should note this doesn't give them completely free rein. You still need 60 votes in the Senate to get most things done, and a number of Democrats are fairly moderate. They're not going to go for things like ending the filibuster or packing the Supreme Court.
Emily Wilkins, thank you so much for all of the updates throughout the day. Let's get some market reaction. Kaylee Lyons watching the ups and the downs. What are you seeing right now?
Well, Lisa, whether or not that second Senate race has been decided, this market is already pricing in a blue sweep. And as a result, the reflation trade is full steam ahead. If you just look at the action in equities this morning, the S&P 500 does look set for a softer open, but that's not where the most dramatic moves are. Instead, take a look at the NASDAQ 100 futures, down about 1.7%. Fears potentially about more serious regulatory threat coming for big tech under a democratically controlled government weighing on that index. On the flip side, though, Russell 2000 futures up nearly 2 full percentage points. That is all about the odds of more fiscal stimulus coming. That is the reflation trade front and center. And just keeping an eye on the dollar here, it has actually flipped positive, still though hovering around the lowest since back in 2018. To get back to the equity story, though, I talked about the reflation trade. Cyclicals really in favor this morning. If you take a look at the pre-market moves for ETFs that track the sectors within the S&P 500, it is energy and financials that are leading the charge here, up about 1.7% each. The technology sector, though, of course, no surprise with that move in the NASDAQ 100, is looking set for a down open. And of course, Lisa, the other big headline this morning is what's happening in the bond market. The 10-year yield back above 1%. That threshold finally broken for the first time since March. Of course, again, that all has to do with stimulus bringing more inflation, as a result, higher yields. And as we know, that 10-year break-even rate is hovering above 2% as well. And Lisa, I just want to round it out here by saying, if you asked me 3 months ago, back in October, when I was reading all of the strategist notes coming out about the election, everyone said a blue sweep was the best scenario. When that isn't what happened in November, they switched the narrative to a divided government being best. So it'll be interesting to see how quickly the narrative could turn, depending on what happens ultimately in Georgia, Lisa.
Kaylee, the narrative always changes according to the facts, and this will obviously fit some narrative, which we will be bringing to you. Kaylee Lyons, thank you so much. Kaylee was talking about stimulus, and that seems to be what a lot of people are pricing into the market, the prospect of a bigger stimulus package from Democratic-led Senate. Henrietta Trey's of Veda Partners has been weighing in on this throughout the year. She's been weighing in on the Georgia runoff elections in particular, writing, quote, "The early read makes it very likely the Democrats will control the White House, Senate, and the House of Representatives in 2021. The main questions from here are how much stimulus is coming and how fast it will come." Henrietta joining us now. You were saying in a recent note that you could see a $2 trillion mark with respect to a fiscal support package. Can you give us a sense of what that would look like? Henrietta? It appears that we're having some audio problems. So can you, yes, we can hear you. We're just talking about that $2 trillion package of fiscal support. And can you walk us through what that looks like?
Sure. The initial package is going to be much larger than that, somewhere in the $4 to $6 trillion range when the House first rolls out their plan. It's going to be a combination of coronavirus relief, so think more unemployment insurance, booster payments from the federal government, coupled with a jobs package, infrastructure spending, a program that is associated with the long-term unemployment rate. These are packages that the Democrats released even before coronavirus hit the U.S. shores and is about $760 billion in spending over 5 years. So you combine those two together, and at the end of the day, when you have to factor in getting the votes out of the Senate, I think you're looking at roughly $2 trillion in spending in 2021, early in the Biden administration.
Can you give us a sense of what that looks like in terms of the breakdown with state and local funding, with direct payments to households? What are you expecting? It appears that we're having some issues with Henrietta Trey's audio. We will get her back at some point to weigh in on this. Right now, we want to get a sense of what's going on in markets. There are some very specific stock movers. Sarah Ponczak's been tracking it all. Sarah, what are you taking particular note of?
Good morning, Lisa. Well, I'll start with what I'm taking note of on the loser end of the spectrum, and that really is big tech. We have a couple of highlights here, a couple of sticking points. Concerns over capital gains taxes, concerns over higher corporate taxes, concerns over the possibility of regulation, especially in light of antitrust proceedings that have been going on, and also just concerns over higher rates. Low rates have really been a boon for growth stocks, for big tech all along. Well, today we see the 10-year surpassing 1% for the first time since March. It's taking a weighting. There you see Apple, you see Microsoft, Amazon, NVIDIA, all trading lower in the pre-market, around 2% or so. Flip it up, though, and let's check out the winners, because there are many this morning on the expectation of a reflation trade. One Bank of America, banks getting a bid this morning. You have higher yields, expectations, the potential finally for wider, larger net interest margins. Bank of America more than 3%. ExxonMobil, currently we still see crude oil prices hovering around that $50 a barrel mark, holding above as we speak after the OPEC meeting. This also fits into the reflation trade. Exxon up 1.7% this morning in the pre-market. Plug Power, this is a company that was up more than 970% last year. Fits into the electric vehicle space. It is a retail favorite while getting a boost again this morning, up close to 5%. There's a focus on green energy this morning after the Georgia runoffs. And one more that we just saw, Tilray, fitting into the weed space, pot space, marijuana space, whatever you want to call it. But the expectation is that we might see some more leeway there, Lisa.
So pot and electric vehicles hot today. Sarah Ponczak, thank you so much for being with us. Coming up, the U.S. political landscape increasingly leaning towards a blue wave. We're discussing the potential market implications with Nuveen's Bob Dahl. That conversation coming up next. In the markets, you can see people trying to get a sense of what this blue wave means. It is decidedly negative, at least in the first read, for tech stocks, as Sarah was talking about, with the NASDAQ now indicated to be lower by 1.7% ahead of the open. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Within markets, I think there may be more in the way of antitrust legislation. There may be more in the way of higher corporation taxes, maybe more in the way of taxes on the rich. I mean, all these kinds of things have been talked about through the campaign, may come to fruition over the course of the next few months. Big issues about spending on green infrastructure in particular, whether that sees the light of day in the months ahead.
HSBC's Stephen King weighing in on what a potential Democratic sweep could mean for President-elect Joe Biden's political agenda. Bloomberg Chief Washington correspondent Kevin Cirilli joining us with more. Kevin.
Precisely, and in fact, there's big takeaways that I think we should glean, Lisa, from the results that are still coming in from yesterday. First and foremost is that the most significant political winner out of last night is actually West Virginia Senator Joe Manchin. He is a Democrat. He is representing a state that President Trump carried by 20-plus political percentage points. And as a result of that, centrists in the upper chamber, regardless of the final outcome, are really going to hold a lot of negotiating political capital. Secondly, that while this does increase the chances of there being another round of fiscal stimulus, because people like Senator Joe Manchin, like Republican Senator Susan Collins, have expressed that they are open to having another round of economic relief, as President-elect Joe Biden has said he would like to accomplish in his first 100 days. But third and lastly, this is by no means a rubber stamp for a Democratic progressive agenda. Items pertaining to major structural changes to healthcare, a new Green Deal, as well as DC statehood. All of those types of progressive items are not going to happen because, according to the conversations that I'm having, there is not a significant majority in any chamber.
Kevin, when we talk about additional fiscal support, you talk about that moderate vote, that Senator Manchin as the swing voter. What kind of appetite is there in terms of size and scope for these fiscal support packages?
Well, it depends on how all-inclusive a package that the incoming administration is putting together. If it relates to state and local aid, that's going to be a difficult pill for many Republicans to get on board with, including people who are open to these conversations like Senator Mitt Romney. But if it includes digital infrastructure, if it includes a national security funding for things like 5G to better protect infrastructure, not just domestically, but abroad, think of the solar winds, then that could be an opportunity to attract more Republican support.
Thank you so much. Kevin Cirilli, I do want to just bring you breaking news. It's been a wild week in Washington and the implications of U.S. policy. The New York Stock Exchange has been going back and forth with whether or not to delist 3 Chinese telecom companies. They said that they would reverse their initial decision. Now they are coming out and saying they are going to proceed with delisting 3 Chinese telecom companies. This has been whipsawing the prices of the American depository receipts. We will get more on that shortly, but really some lack of clarity from the Treasury Department and from the executive order signed by President Trump about how to proceed with Chinese telecoms that may be perceived as some sort of threat to national security. We'll bring more to you on that. Right now, we want to get more on the market. Nuveen's Bob Dahl out with his annual list of 10 predictions for the new year. Regarding politics, he says, despite the polarizing environment in Washington, President Biden, Senator McConnell, and moderate forces will achieve some compromise legislation, but he's warning that investor expectations are high heading into the new year and downside risks could materialize. Bob joining us now. Bob, based on what we saw today, based on the verdict that we are expecting, and it seems to be the case over in Georgia, how much do you think is priced into the market, and have people gone a little bit too far in their enthusiasm about more fiscal support?
I don't think so on the fiscal support. Look, I think this election outcome, assuming it is 50 Democrats, means the probability, as Kevin's just reported, of a fiscal stimulus, another fiscal stimulus package goes up. So that's good near-term news for the economy. It's additional reflation, if you will. But the longer-term implications are probably tax rates are going to be a little higher. If I was a corporation and paid no or very low taxes, I'd be worried. Higher income Americans, there could be a compromise, so there's some rise there. So we're going to have more stuff done, but it's going to be at the margin as these moderates have a much stronger voice.
Let's talk about the returns expectations that you have at a time when most people think that the equity markets can continue to climb based on an environment that's positive for earnings and this fiscal support, and yet so much of the gains have already been baked in. How much more do we have to go?
We do believe that 2020 borrowed some of the returns from 2021. We do think stocks will be higher in 2021, but less than earnings. Our guess is the earnings will be up more than 20% with another fiscal package that might be 25 or more. But we think the stock market will not keep up with earnings. In other words, we'll see some compression in multiples as interest rates and inflation move up a bit. Still stocks higher, but not as much as earnings.
All right, people have been talking about this rotation into cyclicals, which seems to be gaining steam today. You see the Russell 2000 outperforming ahead of the open. You also see financials, in some cases, up more than 3% as people price in a steeper yield curve. How much more do you plan on piling into these trades? Do you think that they have legs?
I do think there's more coming. That was one of our predictions, even expecting the Republicans to gain at least one of those Georgia seats. with the Senate going Democratic, it probably increases the speed and the magnitude of the rise in those cyclical names, value, small cap, at the expense of bigger cap and some of the big, high, expensive growth stocks.
So there's also a question about higher yields, how much higher they can go, and what that does to tech. Do you see that becoming a major headwind, a major disruption to the rally in the big tech names?
I do think it's an issue. The consensus forecast for 10-year treasuries at the end of the year is between 120 and 130. Our guess is it will be 150 or higher, which is enough of a difference for us to say, yeah, this is an out of consensus thing we need to talk about. I don't think it necessarily causes stocks to go down, but it's part of our not up as much as earnings, and the composition of what works well is probably not very high PEs that have done so well in a nearly zero interest rate environment.
We're speaking with Bob Dahl, Nuveen, Chief Equity Strategist, and we're talking mostly about the U.S. and some of these calls, which many people think of as becoming more consensus, albeit it depends on the levels that we're looking at. The U.S.-China relationship has been increasingly tense, and it comes at a time when investors are increasingly looking to China for returns. They're going into the bond market, they're going into the equity markets, and now we have potentially a tit for tat that's erupting, a lack of clarity around the policy that the U.S. Treasury is taking with respect to certain Chinese telecom companies, the latest being that the New York Stock Exchange is going ahead to delist these stocks after all. How difficult is it for you as an investor to have a call on Chinese assets when you have this trade war, when you have this tensioning relationship that seems to only be poised to continue to do so this year?
Yeah, that issue is a big one. Make no mistake, the U.S. and China are in a Cold War, and that's going to persist. China will not get quiet until they become the leader militarily, economically, politically. They have huge aspirations, and of course the U.S. is trying to check all of that, and I think Joe Biden will try to bring more allies into it to make it more multilateral. That doesn't guarantee there will be success. Look, the Chinese economy has done well. It recovered more quickly from coronavirus than lots of other places, and in fact their economy may not be as strong in 2021 as it was in the back part of 2020. But its sheer size and the magnitude of its growth rate makes us think that that part of the world would do well. We want to play it via a lot of emerging markets that are serving China, if you will, and India, which is also growing pretty quickly.
All right, so what are some of the emerging markets that are serving China that you see as potentially good spots?
Take the whole Pacific Rim that is geographically located close. We endorse that part of it. We think Mexico and Brazil might make some sense as well, obviously farther flung geographically.
So what about in China specifically? Would you stay away from Chinese assets because of the unpredictability in foreign policy?
No, we think the underlying growth rate probably means that market's going to be okay. If you own it or thinking about it, make sure your seatbelt and shoulder harness are fastened, because it's going to be a bumpy ride.
So how do you position at this point, given the consensus that's been baked into markets? Do you have certain levels that you say, okay, we'll buy tech because we think that if it sells off X amount, we'll go in, or we'll buy cyclicals up to a point, and this is our trigger point? Is that what you're doing? Are you establishing those levels right now that are make it or break it for these different sectors?
We're obviously working on that, but we think we're a ways to go from that. In other words, if you're overweight high PE tech, take a little money off the table and buy a bank or another cyclical. Not enough people did enough of that in the back part of last year. So we expect that there will be more of that before we start trying to think about, okay, where do we add to technology and where do we subtract from these cyclicals?
Bob, I was looking at your 10 calls from last year, what you got right and what you got wrong, and I will say congratulations, because you got most of them pretty spot on. The one that you didn't get spot on was active managers outperforming their benchmark indexes for the first time in a decade. Is this the year that you think this will finally come to fruition, or do you think that active management is in permanent decline as a whole, perhaps not individually?
Well, we hope and pray that that's not the case. Look, among the reasons, maybe the chief reason why that prediction did not come true last year was the power of those big five stocks, FANG and close to it. those stocks were gargantuan performers. And unless you were overweight them, you didn't win. And most active managers tend more toward an equal weight than a cap-weighted portfolio. So that was a huge headwind for active management. Active management got out of the gates last year, outperforming the indexes. Then coronavirus hit, and we got that mega capitalization stock outperformance. If those stocks are underperformers this year, I think active managers will have a good chance of winning.
Bob Dole, thank you so much for being with us. Bob Dole of Nuveen Equity Strategy. Meanwhile, coming up, we're going to be talking more about the Georgia elections and what we saw and how it may change the nature for markets. We've got HSBC's Stephen King weighing in on that, and we're going to be getting a sense of what that means also from the China perspective. From New York, this is Bloomberg.
新型にはなんと2万点以上前進でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is the countdown to the open. I'm Lisa Abramowitz in for Jonathan Farrow. You can see we are a little bit in the red today to start the day. Time now for our morning calls. We'll look at some of the analyst recommendations on Wall Street this morning. First up, Piper Sandler downgrading Beyond Meat to neutral with an $125 price target. The analysts saying that consensus estimates are too high with current momentum lagging consensus expectations. Next up, Bank of America upgrading MasterCard to a buy with a $400 price target. The analysts saying shares are underappreciated ahead of the post-pandemic rebound. And finally, Morgan Stanley raising its Tesla price target to a street high $810 with an overweight rating. The analysts citing the electric vehicle makers' better than expected deliveries and solid access to capital. It's amazing how the fortunes of Tesla have changed on Wall Street. Coming up, the rotation trade making a comeback with investors preparing for a potential blue sweep. That conversation coming up next with JP Morgan's David Leibovitz. The opening bell up next, and this is Bloomberg. you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel. This is Bloomberg, the open. We have 20 seconds ahead of the market open, and we are indicated lower, although off the earlier lows that we saw following the election results in Georgia that does appear to show Democrats gaining control of the Senate. NASDAQ underperforming here. And there we go. We have the market open right now. NASDAQ currently lower by 1.5%. 10-year yields maintaining above 1% despite a disappointing ADP jobs report, 1.015%. Crude getting a little bit of a lift. But if you take a look, really, it's equities and the rotation that seems to be on. Meanwhile, investors are dusting off their blue wave playbook since the Democrats seem to be moving closer to controlling the Senate. For how the markets are reacting, Bloomberg's Kaylee Lyons has been tracking it all. Kaylee.
Well, Lisa, that blue wave playbook is basically the reflation trade full steam ahead. You can see that evident in the cyclical stocks this morning. The likes of energy and financials are leading early on. That's evident in the shares of Wells Fargo, higher by nearly 5% at the open. Of course, the bet is that a democratically controlled government will bring larger fiscal stimulus. That also means higher yields. We do have the 10-year yield above 1% once again today. That steeper curve is helping out the banks. Industrial's getting a bid too. The idea not only of better growth, but more infrastructure spending. United Rentals is higher by more than 5%. And on green spending in particular, take a look at fuel cell energy, up by about 7% in the first minute or so of trading. A lot of optimism in EV and green energy stocks today, and that isn't so much a reflation trade, but still could benefit from Democratic control. That is pod stocks. Canopy Growth up a whopping 10.5% right now. Now, it's not good news for everyone this morning, Lisa. On the other side, you have the threat of more regulation, of higher taxes. That is weighing heavily on big tech stocks this morning. Take a look at some of the mega caps. Amazon down more than 2%, Apple by nearly 3%, Facebook down more than 3%. Even Intel is taking a little bit of a leg lower here as that tech sell-off really is quite broad this morning. It is get out of tech, get into the reflation trade, and that also means small caps, a big outperformer early on, Lisa.
Kaylee, thank you so much. Lest anyone feels too terrible for Amazon, shares still up nearly 66% in the past 12 months. JP Morgan's David Lebovitz remaining bullish on cyclical assets, writing, quote, many investors are singing from the same song sheet. If reality fails to align with expectations, the subsequent bout of volatility may well be exacerbated by elevated valuations. David joining us now with more. Can you give us a sense of where you see the consensus perhaps being overplayed, even with this new news coming out of Georgia?
So I think that, coming into this year, a lot of people were expecting a fairly strong bounce in economic activity during the second half of 2021. And what this morning's news out of Georgia really suggests is that that bounce could be even bigger than a lot of people had penciled in. And so, the question that we need to ask ourselves as investors is, what is the knock-on effect from that? You're seeing rates move higher. There's an expectation here that a Democrat-controlled Washington will pump more stimulus into the economy than would have been the case under a divided Washington. But what does this mean for policymakers like the Federal Reserve? Does it mean that we begin to see more meaningful signs of inflation? I think that, frankly, this morning's news reaffirms the idea that 2021 will be a fairly good year for the economy, but creates some questions around the direction of travel in 2022 and beyond.
When does the Fed get involved? How high can yields go before the Fed says, we're not going to tolerate this?
So I think, it's interesting. I was looking at the distribution of forecasts for the 10-year, and most people have really latched on to this 1.2, 1.3 range. I think anything above that is going to start to make the Fed a bit uncomfortable. At the end of the day, for them, it's really all about the state of financial conditions. And I do think that if the 10-year is edging up, north of 1.25, perhaps towards 1.5, that's when you'll see the Fed start to try to first talk down rates and then potentially take further steps if they can't seem to get that situation under control.
Well, based on the outcome that we saw in Georgia, have you changed any of your assumptions about the markets or market calls for 2021?
Not drastically. I always thought that 2021 would be a fairly solid year for risk assets. I think the view at the end of 2020 was, wow, we saw so much happen this year that next year is going to be challenging. But, an improvement in economic activity, fiscal and monetary policy that not only remains accommodative, but remains relatively coordinated. I mean, that's a fairly solid setup for risk assets over the course of the next 12 months. So kind of standing our ground on the view in the short to medium term. But again, I think what this tells us, what this suggests to us, is that we have pulled return forward from years like 2023 and 2024. And so the playbook is going to have to change here as this rebound in economic activity gets priced in. And at the same time, I think you're going to see more conversations had amongst the investment community about hedging against that risk of inflation and different ways of doing that in a very low interest rate environment.
Such as going into Bitcoin?
Bitcoin is obviously one asset that's garnered a lot of interest over the course of the past couple of weeks. I frankly think that there are better ways to hedge against the risk of inflation, more productive ways to hedge against the risk of inflation, things like core real assets, real estate, infrastructure, transportation strategies. Bitcoin as a part of a portfolio may very well make sense. But again, I wouldn't put all my eggs in one basket when thinking about the risks posed by inflation.
Well, David, stick with us. The New York Stock Exchange proceeding with its plan to delist 3 major Chinese telecommunications companies. This goes after a lot of back and forth, and we saw a lot of swings going on with the telecom companies, ADRs, American Depositories, receipts. Bloomberg's Sarah Ponzak is joining us with some more details. Sarah.
And there we have it, a U-turn of a U-turn, Lisa. And that's just one of the developments that we've seen over the last 24 hours. Add that to President Trump signing an order that bans U.S. transactions with 8 Chinese apps. Now, those apps include Alipay, WeChat, and Tencent's digital wallets. But largely, if you look over the last year at the NASDAQ Golden Dragon Index, so this is an index right here that has Baidu, Pinduoduo, NetEase, JD.com, Alibaba. These are all top holdings. Still, we've seen it up more than 50% over the last year, and within the last 5 days, as you can see right here, up close to 8%, so still holding in pretty well. But back to the news of the morning, that we do have that double U-turn. The New York Stock Exchange will delist these 3 companies. This after yesterday, the NYSE did have more conversations with senior authorities. Also reportedly, Treasury Secretary Steven Mnuchin did express his displeasure over their decision yesterday to not delist the companies. We had a nice relief rally yesterday in the shares, all at more than 8.5%. Well, you see that reversing lower today, but not reversing the entire relief rally that we did experience yesterday for ADRs of China Mobile, China Telecom, and also China Unicom. But also, let's look over the last 4 years. Compare some of these stocks by way of benchmarks to the likes of the S&P 500 for U.S. stocks versus stocks listed over in Hong Kong. Really, in aggregate, the last 4 years, a period that really encapsulates President Trump's presidency, we have seen U.S. stocks outperform. The numbers for you, the S&P 500 over the last 4 years, up about 64%. Meanwhile, the Hang Seng up a lesser 23%, Lisa.
Sarah, which shows why so many people are still investing in China despite the volatility from policy. Sarah, thank you so much for that. A Columbia Business School professor was quoted over in a Bloomberg story overnight saying the intent was to penalize these companies and penalize the Chinese government. The problem is it ends up penalizing U.S.-based investors. JP Morgan's David Lebovitz still with us. David, how do you invest as a U.S.-based buyer of assets? How do you invest in Chinese-related assets if you know they could be subject to volatile policy?
So I think that, the China question comes up quite a bit. And I think the first differentiation that needs to be made is whether you're talking about offshore Chinese equities or onshore Chinese equities. And more we're seeing clients really embrace that onshore opportunity set. And when we look at companies there, look, we recognize that one of the few things Democrats and Republicans agree on is the need to take a tougher stance on China. This is not an issue that is going to go away, but perhaps the way that this is approached, if you will change under the new administration. That said, when it comes to the opportunity in Chinese equities, I think you want to avoid those state-owned enterprises. You want to focus more on that pure play on the Chinese economy, which we think can be better realized through private companies rather than government-controlled companies. And I think at the same time, that removes at least some of the risk, not all of the risk, but some of the risk that regulatory issues work against you over the course of the coming years.
Well, not to get too philosophical, but what is a state-owned company when you have Alibaba, for example, entering the crosshairs of the Chinese government because of its size and its power, with efforts to try to de-emphasize some of its, I believe they called it a data monopoly that they're trying to disseminate. I mean, how do you navigate that aspect of even private companies?
So I think that, it all comes back to the idea that, one, the distinction between the two is very, very crude, quite obviously. And despite, the designations that are given, as we've seen over the past couple of days, that doesn't necessarily, mean everything at the end of the day. I think the way to go about it is to really try to understand what risks exist. And the best way to do that is through on-the-ground research. When we look at companies in China, I don't sit here on the East Coast trying to figure it out for myself. I talk to people that are in that economy, and oftentimes that gives us much better information, which then therefore allows us to make better investment decisions rather than speculating here in the U.S. about what may or may not happen. And so, I think that it increases the need for really that fundamental aspect of the research process. But at the same time, I would say, look, without risk, there's no reward. And clearly a risk when it comes to investing in China is this element of government control and regulation, so on and so forth. And that's why we believe that there is significant upside in Chinese equities and in emerging market equities more broadly over the longer term.
Just quickly, another aspect of the China investment thesis has been the Chinese yuan, which has been steadily strengthening versus the dollar. Overnight, the Chinese government seemed to show a little bit of discomfort with how strong it had been getting, pegging the currency at a weaker rate than people had expected. How involved do you expect them to get in depreciating their currency?
I think that it's going to bounce around in a band, and I think that there are limits to how much they will let it appreciate. There are limits to how much they will allow it to depreciate, and I think that it's important to come back to what is the Chinese government's long-term plan here. When we think about the U.S. and the way policy is conducted here, it's very short-term in nature. We think about the next 12 months, maybe the next 24 months. Right? In China, they're thinking about the next 5 and 10 years, and so I think when you take that longer-term view on what a stronger or weaker currency means for that economy, you can begin to better understand and therefore build better expectations around how it may be managed over any given period of time.
David Lebovitz, thank you so much for being with us. Coming up, Treasury yields topping 1%. Investors increasingly seeing a Democratic sweep is reigniting the reflation trade. That conversation coming up next with Invesco's Matt Brill. In the markets, we are seeing a bit of a sell-off with big tech underperforming as people take a look at the prospect of potentially more regulation as well as higher yields, which has been one of the backstones of this investment thesis. This is Bloomberg.
If the Democrats do end up winning both of these Georgia seats, to us, that raises the risks that you see the rate repricing occur a little bit faster and potentially higher than we anticipate. It's less about a level, and it's more about the set of conditions that's pushing rates higher. It's really all about the distribution between break-evens and real rates.
Bank of America's Mark Cabana saying the Fed is unlikely to intervene with rising rates. This amid rising bets on the reflation trade, with Democrats edging closer to Senate control. For more, Michael McKee. Mike.
Lisa, as long as we're mixing politics in with the markets, let me quote Benjamin Franklin in 1787 when he was asked what kind of government we had. He said, a republic, if you can keep it. Well, now you got 1% 10-year rates, if you can keep them. They did move up overnight, crossing the 1% threshold, but this has been in the works for a while. We saw break-evens hit 2% on Monday, and of course, yesterday we had the strongest ISM numbers since 2018, and that's put pressure on the markets. Now you throw in the prospect of more stimulus from a Democratic-controlled Senate, and yield curves have steepened 530s, as you can see, the steepest since 2016. So the first question, how long does it stay that way? There's a lot of economic risk right now. We saw that in the ADP numbers out this morning, a loss of 123,000 jobs, and a real chance of a negative print on payrolls on Friday. So do markets continue to push yields higher, or do we drop back below 1%? The deflation that we saw in February, March, April last year is going to fall out of the numbers. We're going to see inflation come back. But does it stay elevated? Not according to the economists we've surveyed. You can see there, the white line is their forecast for the first quarter. The blue line is their forecast for inflation in the second quarter, but the third quarter is the yellow line. It comes back down again. It's really more a statistical change than anything else. There's not a bet on inflation right now. John Ossoff, not going to be the reason for a rate increase. But as more spending hits the economy, perhaps tax increases are considered in Washington. If long-end yields stay high, it may influence the Fed's thinking not to raise rates. They'll keep rates low until they get that inflation target of around 2.5% that they were looking for. But we might see them decide to cap 10-year rates or longer by changing the weighted average maturity. Get used to the word WAM. The length of the purchases that they buy, they may move out on the curve. You can see most of what they've been buying in their $80 billion a month is at the short end. And so the focus of the Fed minutes today, 2 o'clock this afternoon Eastern time. What did they say, if anything, about that possibility, Lisa?
Michael McKee, thank you so much. And just a quick update on the Georgia election. We have the Democrats that have come out saying that John Ossoff did win that Senate seat. And now House Speaker Nancy Pelosi also saying that we are not getting confirmation from any of the official election sources or networks. We will keep you posted. In the meantime, we are seeing yields rise. Invesco's Matt Brill expecting rates to continue rising off the back of a blue wave in Georgia, writing, quote, we are not concerned about a material move higher in rates longer term. However, you could see a relatively sharp near-term backup in 10-year rates to 1.25%. If the Democrats take both Senate seats in Georgia, at that point, we would expect the Fed to aggressively support treasuries. Matt joining us now over the phone. Is that the sort of trigger point here, 1.25% that the Fed gets involved?
Hey, good morning. I think it's yet to be determined, but really at this point, the Fed has been so supportive and so clear that they're going to support this market. They've really been working so hard to keep rates low, to help the economy come back. And so if you start to see this get off